Good morning, everybody. Fix opening just under 20. They look pretty well set up to try to pump, if nothing else. Futures rejected off the 42.25 resistance. Pulling back a little bit. So we might fill the gap pretty quickly. There's a big pile of puts at 4,200. And then a big... Oh, shit. Yeah, okay. And then a big call wall at 95. So we're kind of stuck here. We've got data coming in kind of left and right. We got S&P manufacturing PMI at 945. And then we have ISM and JOLTS at 10. And then not a lot until the Fed meeting, but both of those are huge. So we'll see how that shakes out. Funny thing is Netflix fell back to like WeWork filed for bankruptcy, right? Their stock price has been plummeting for months now. Well, really since like 2021. Stupid fucking business model. Does JPO try to slam the brakes on this today? We'll see. The market's giving him literally every reason in the world to do so. Which means we'll probably do nothing. Time for long-term Netflix puts. There's some for like November 17. It was doing pretty shitty in the pre-market today, and now it's ripping. So, yeah, fell back under 410. Next resistance to the upside here, I believe, is at 418. 418.58. I'm not super concerned with it yet, mostly because I don't expect the market to stay up for much longer. But we'll see what happens with JPOW and stuff today. Looks like everyone's pretty well prepared for vol demand. VIX expiration is going to be locked in soon. Dixie's now above 107. Jesus Christ. But yields have pulled back. Yields pulled back pretty hard with the Treasury announcement this morning. Not for any actual reason, but someone's getting in. I would say based on the yen, maybe Bank of Japan committing to some open market action. Yen's down 20 BPS, but doing a little bit better than it was yesterday. Not much, but yeah, a little. Yeah, it's kind of moving right back towards its prior peak, which was Tuesday, 151.72. Pound and euro are down too, pretty equally. Gold's kind of flat. Oil's up 300 or 250 BPS. NQ's up 30. ES up 15. Russell and Dow are down. I averaged down some 2D puts. I might add to some of my spreads, but not yet. Wait and see if I'm going to cut them. So big old Mag 7 pump as per usual. Well, yesterday we didn't have much of a Mag 7 pump, so a little bit of one today. Yesterday Mag 7 kind of underperformed. 2 billion less treasuries issued than the estimate, so obviously MOASS. Exactly. 2 billion's a really big deal. Ignore the other 1.6 trillion in issuance. It's that 2 billion that matters. The bond market is just acting in the most efficient possible manner, Evans. They'd already priced in that 2 billion. The $50 billion change in yields today, representative of that $2 billion being priced in already. Big brain. It's very smart. How the fuck do I turn this stupid pumpkin thing off? Really? Oh, fucker. All right. This is what we're doing today. I'm not going to deal with it. Thanks, Jason. Seriously? Dude keep me complaining about her cat. I could tell by the way she walked, she would be nothing but trouble. The dame. This isn't a fucking detectives movie. I don't know if fucking with this morning's price action is very intelligent. ISM and Jolts are going to be pretty unpredictable. The Bulls are trying to de-risk all their bullshit at 4,200, which they're not really break even on until like fucking VIX 17 and then above 42.25. So they may not even get their wish. Yeah, I don't know. I'd probably just, you see the housing market index? Yeah, it's like the lowest level since like the 90s, right? It's different this time around. Yeah, I'm sure it is. Thanks, Potato Tom. $19.95, healthy. So this time our housing market's leveraged to the tits of the tits. The housing market's always pretty leveraged, but yeah, it's worse. Because now everyone's home equity is being used to pay for their Airbnb, which got banned. I wonder if you could get a real tenant to sign a 12-month lease to a bedroom with a toaster. What do you think, Dork? You think that's maybe? Surely that wouldn't go against health code violations, right? Or could building code? Both? Only if you offer it for the low, low price of $2,500 a month. It's only a problem if you get caught. That's true. Thanks, Halitosis Harry. At this point, it's going to be you and Eric Adams, the last homeowners in New York City. He's going to try to include New Jersey as the sixth borough. Kenny's got a house here. Is the toaster on a shelf above the bathtub? No, the bed is. Nice, Nuke. You think a 2 DTE strangle on FOMC would be a good idea? Not particularly. Why do you need 2 days? I mean, it could be fine, but I don't understand the need for theta. It'd be so cool if Crowd hit 185 today and Netflix 385. Think how neat that would be? That'd be odd. I thought the IV crush after, that's gonna, I mean, IV's not gonna crush today. Not substantially, right? Like zero DTEs are probably going to stay pretty flat as far as IV is concerned into the end of the day. So like even if there is any crush, you're nearing expiry and that's gonna bring IV up, right? You too, proven crown builders. You too. How high can SPX go today? 42 40 30. Was the toaster on the shelf above the bathtub? Gurk? No, the bathtub is. I said the bed is. Take my money. Did I say bed? Now I don't know what I said. You said bad? Okay. Oh, typo. I saw the data come down the tape. VIX is going down faster than the Hindenburg. Yeah. 1 DTE strangle is probably most prudent for capturing FOMC action. No, zero DTE. Straddles and strangles are the best if you're going to try to leverage the Fed decision. Although, that could be a bad idea. I find that most people lose money trying to take that play. They get far too greedy and they try to play the continuation. Is it realistic to assume I'll be able to afford a home where my bedroom isn't also my bathroom, kitchen, and living room in the next 10 years? I hope so. Ooh, we have goodies. Wait, there. Oh, okay. Despite there being a lot of calls to the upside, they're kind of huh. What the fuck? How can you rent a unit for people to live in sensory deprivation chamber? Autism recharge? Is that a fucking air conditioner in a wooden box? What in the actual fuck? Imagine being the lawyer having to draw up the contract for that. You know what I've always thought universities needed more of? Housing advocacy. Like my school had it. They had like a legal office for students where you could get like free legal help for basic shit. Landlord tenant was one of them, but most schools don't have that. And a lot of like shitty landlords just take advantage of college students. Like in most municipalities, you can't rent anything that doesn't have a bathroom and a bedroom. At least not to a human. I don't know how to turn the fucking filter off. Thanks, Poo Poo Pants. Is a filter so we can't see your shirt color? It's gray. I have a gray shirt. It's actually kind of accurate coloration for the shirt, at least. I've spent the last 3 minutes examining the tape. You did indeed say bed. You delivered it quickly and with great humor, and nothing has changed because Lawrence corrected it immediately. Thanks for doing that diligence, Brett. I don't know what I would have done without you. And providing an invaluable service to the pickle jar. If the pumpers get their 4200s de-risked at break even, we're at the risk of having another year of their bullshit. Well, I mean, they're de-risking. So, no. They're compounding risk lower, so they're retreating still on as far as their short puts on the chain go. They're moving them mostly down to 4,000, 4050. They've added here and there to 4,100, but not very much. But 4,200 and 4,250 are still deeply underwater. I'm gonna sell when GME goes up 20% a day. Fuck this stock. I'm shorting this bitch boy. MSM when Nvidia blatantly committing fraud. I'm doubling down AI to the moon. Yeah. Nice, Brett. How big of a drop before the shirt comes off? I don't know. Yeah, it's just kicking the can. If we hit a halt to the downside, I have a feeling all of Gurk's clothes might come off. Yeah, but not by like my own choice. Like they would just fly off my body because the white hot heat of my righteousness would burn through them, right? Like it would be like taking clothes off manually, like a peasant. Hedging's neat. It's pretty cool. Do the Bulls have momentum? A little bit. For now, it could be running a bit dry here. Um if I really gotta dig into this, it could be difficult to cross 4220. 4225 interest is kind of weighted down by all of their shitty short puts. And even though like zero DTE interest to the upside is high, there are some big fat put walls at 4225 and 4250 on the longer dated positioning on the chain. Although I do think if the Bulls get what they want out of J-Pow today, we're likely to see continued upside for maybe at least another week. So today will be pivotal. Jolson 5, yeah, ISM too. How were smug burns treated? Olive oil. I'm a little ashamed to ask since I've been here for so long, but I know it's a safe space. What's a peener? It's a slang for penis, like a phallic object. Could be a candlestick, broom handle, thick flashlight, really anything. Skinny flashlight, if that makes you feel better, Wessels. Tuna can. 4 more minutes. I mean, it could. Strong labor data is not exactly good, although I think a lot of asset managers are banking on the Fed continuing to do nothing. Um, I don't think that's going to be the case for long, but I also don't think JPEG is going to do anything today. I think I'll wait till he has his dot plot to back him up at the next meeting. And then he's going to be like, hey guys, guess what? Federal funds rate's going up in 2024 a bunch of times. If JPEG can do anything to be a man, it'd be drop a fat 1% rate hike. It really would be, yeah. Our end of November 4,300, 4,200 bear spreads, pretty safe. I mean, no, maybe. I mean, you're kind of going back in the money here. That's not good. That's what I thought. Wasn't sure. The simple answer is usually right. Thanks. Yep. Yep. Occam's razor. All that. What's a good hedge for a small number of November SPX bear spreads? Shorter dated bull spreads? Could be, yeah. Hashtag audit NVIDIA. Hey guys, guess what? Peener, red peener. Data's not even out yet. I don't think the color of the candle matters here. Coke can, Pepsi can, water bottle, Celsius can, Fersen sausage links. U.S. Special Forces deployed in Gaza. That's priced in. That's why VIX is going down. Projection of rate cuts sooner. Any sign of dovishness whatsoever, BJ? Any hint that the Fed thinks that inflation is on track to go down and that they may pull their higher for longer policy? Just even the mere question of pulling back their higher for longer policy at any point. Did the Bulls just pump here anyway? Yeah, probably. Fuck, what happened, Dork? Well, that doesn't look nearly as bullish. Hey, data's out. Manufacturing PMI is slightly up. but ISM is down. Job openings are way higher than expected. ISM manufacturing employment is down. Construction spending is below estimates and down over the prior. New orders are down. Manufacturing prices are up. And job quits are below expectations. Excellent. So just a big pile of bearish data. So not only is manufacturing contracting, they have fewer new orders and they're charging more for the products. The labor market is robust. So what now? Well, now the bulls pump and try to get their fucking bags out from underwater. Bearish, more pumpies. Yep. I don't think the time to ask me if it's time to cut your puts is the third bullish day in a row. Dixie dropped 20 BPS in one tick. Yeah, well, they were prepared to offset any selling that occurred due to the data. You should see what happened to yields. Ooh, kind of breaking to the upside of our bear flag here. Starting to. I do like that. What do we got, Dork? I've got charts for you if you have charts for me. What the fuck? Subs JPOW $5 bill. This is just say AI once. You think the issued statement is bland and JPOW comes in like a hawk, or the statement is strong and JPOW comes in like a nice guy? I think you should raise rates. But he is a bitch, so he may not, right? Ooh, interesting. Still more call buying. Pretty aggressively selling puts here. So they're trying to stamp on any long vol interest. A little bit of in the money call profit taking. All right, that's pretty funny. Oh, Jip had to come out looking like he hasn't slept in a week. He's gonna have to fuck somebody. I'm not gonna talk like a mobster. Hmm. Interesting. Well, hold up a second. How does the chain look? Um, like there's still a shitload of calls at 4205, 10, 15, 20, 25, 30, 35, and 40. And it kind of slumps and picks back up again into 60 afterwards. I would say right now, though, it looks like we're seeing a little bit of put buying. I'm not sure at what strike, though. Could just be closing short puts as well. It's very much trying to look like someone's trying to hold up an entire mountain made of pure bearishness with 3 sticks and some twine. Yeah, yeah. I googled some 1920s phrases for you to say, and noodle juice came up as the leader. What what the fuck is noodle juice? JPO raises 1%, 4,100 end of day. Wells Fargo chapter 14 on Monday. Nice. Is JPO afraid of limiting his paid speaking engagements after he retires from the Fed? No, he's afraid of collapsing the bond and equity markets simultaneously. This is interesting. I'll put interest at 4,200 is climbing. 4,190? 95 still looks weak though. Well, I guess more puts there and some profit taken on the 180 and 165 call walls. Interesting. Well, that scared out some of the out of the money calls a bit. We probably need to drop an actual price to scare more out though. Noodle juice was tea. If you threw it out today, I would think you meant something else. Yeah. No, I'm not watching the Treasury press conference. Is Yellen saying things like soft landing and don't worry about the $1.6 trillion I'm issuing? Yellen's not there. They're answering questions from the press. So we're just going to keep following positioning. Hmm. Holy fucking shit, this economy is bussin' for real on God. We doing 1.6 trillion because daddy's credit card gonna get that perm poppin'. Janet Yellen, November 1st, 2023. I don't want to watch that. I already read the report. Just because they have to explain it to the press doesn't mean I want to watch them do it. Their funding plan is out already. I put it in the daily. Do you think they get VIX 17? We're pretty close, right? Yeah, they could get it. Looks like they got their bounce. For now. Shouldn't be too much resistance here on futures. 242 is the next stop. Oh, wait, can I trade this fucking thing? No. That's on 12 DTE, 4200P for end of week drop. Could be a little early to pick one up. It could go lower. All right. We're hitting 4250 end of day. 4230 is far more likely than 50, but we could. That'd really depend on if they're able to squeeze this level out or not. But yeah, I would say they would probably run into some resistance at like 25-30. I think they're going to try to get it as high as they can before the FOMC meeting so that they can de-risk more. I'm starting to think that no one here bought the dip. It's possible. It's not like you had to buy the dip. You could have just. I started to consider yesterday that nobody bought calls to hedge, and then nobody closed their puts that were up 400%. I didn't close because they're all December and Jan pits, so you hedge them, right? Is everyone looking at me? No one's looking at you, man. Yes, I hedged them. What is that supposed to mean? My 4200 C hedges are going to pay for so many 4200 Ps. See, that's the idea. No, theta isn't a hedge. It reduces risk, but it's not a hedge. Is it worth buying it? near the money call here, and then buying a put later to make it in the money strangle for FOMC. Okay. I mean, a call? Oh, okay. Yeah, call here. Put later. Yeah, you can do that. Thank you, Barrett's Axel. Some of us really do listen and hedge and stuff. Not everyone sucks. I'm getting that feeling again where like, no way this stays above 4,200, buys 10,000 puts. No way this stays above 4,300, buys 10K puts. I'm just gonna buy a call and save myself. Okay. Can I trade on this account? Oh, nope, that's the wrong one. Oh, wow. Well, I'm not buying those. That's okay, guys. Out the money puts are only $14.60. Right, 42.20 is the first point at which we see any resistance. If we see any resistance. So between 20 and 25. After 25, we can move up to 30. 30 is kind of like the peak of where the interest is today. So if we reject here, we've created an uptrend versus consolidating upside. But we're at futures resistance at 240, 250. $42.70 ES is my line. That's the next resistance to the, well, the next big one to the upside. 63 is a resistance too. Ew. I have some time. Fortune. 16 days. Oh, I can wait. Yep. They're gonna go for it today? Yeah, I think so. This should be, yeah, VIX 17, 42.25. So this should be roughly break even on their 4,200 short puts. The 4,200, 42, or 42.25, 42.50 short puts still underwater. I bought calls to hedge and closed my profitable puts this morning. Nice. What sort of hedge are you taking into Jay Cuck's speech? I'll probably just pick up like an at the money straddle. I still haven't closed out of my straddle from last night, but I'm not really sure that the puts at 41.90 are gonna do me any good here. What did they do to the poor VIX? Slammed yields and tanked vol. I'm pretty sure they got VIX back out of backwardation. Yep. Briefly, at least. Which is the first time we've been this far below where backwardation is since October 26th. The 30, 20, and 10-year and 5 are all almost down 300 BPS. Dixie's down 0.02 though. Do you think it's remotely possible for the Fed to do a surprise rate cut? The data's starting to come in showing some economic destruction, and YCC will do credit tightening for the Fed. What data is showing economic destruction? Like manufacturing slowing a little bit? It's not even like at its lows for the year. GDP just printed at like 4.6. And inflation's up across the board. I would say, if anything, it looks like we're just right back to where we started. And the entire tightening cycle has basically done nothing so far. Mostly because equity markets are fighting back against the Fed, and lenders still have an outlet with which to lend at a premium. That's closing, but it hasn't closed yet. Apple earnings are causing the pump. Nobody expects Apple earnings to be good. But they shouldn't, because Apple was like, our earnings aren't going to be good. You probably answered this many times. Isn't money going into bonds supposed to be bearish for stocks? How come when yields drop, stocks up? Because vol down. OI update? Hasn't changed much. Pretty much the same as it was. 4230 is kind of the local peak for call interest. There's still some call buying going on, but put selling's kind of leveling out. Need a little bit more volume or momentum to break above 4225. So stuck in a little bit of a rut here. And this is also resistance on ES. This is like our upside resistance on ES. But a break above this is super bullish. With the data that came in today, do you think it's more likely that the Fed raises rates? I mean, I think the data today opens up the possibility a bit more. I think the thing that opens up the possibility most, though, is that bonds aren't really holding the higher yields, right? Like right now yields have dropped like 300 BPS today and quite substantially over the last few days. So I don't think Powell can rely on the bond market to appropriately tighten credit, right? I think more importantly, and a lot of bulls are banking on, the bond market having priced in additional tightening for the Fed already. But that's volatile, right? It's not like really priced in. It's just temporarily priced in. Which, the big drop in yields today is showing us. I'm Riker. Welcome to Zillionaire, dude. Thank you so much. I appreciate it. Hit me up on the Discord. I'll get you added after the stream, dude. I love how Apple Investor page says the only supported platforms to listen to the investor stream are Apple devices. Are they? Don't they just live stream it on the web browser? Earlier said they might start de-risking at 42.25, VIX 17. So they might start soon unless they manage to push higher. I think right now they can try to push higher. They don't need to de-risk until FOMC, right? So the higher they get it, the more risk they can get off the table on the downside. They're not going to de-risk fuck all until it's too late. You eyeing up Netflix puts again? Not yet, no. We'll see how today shakes out. I may just cut them and re-enter later. I'm not going to do anything with the ones I have right now, but it's definitely above where my risk tolerance is. I don't have any just straight up puts though. I have debit spreads, so I'm not as exposed. Otherwise, I'd have cut them already. A bunch of oil data just dropped at 10:30. Yeah, it doesn't matter. AMD rocketing even though quarter four downgrade. Yeah, 6%. That's not gonna have a huge impact on well, anything really. AMD has a market cap of like 160 billion. I'm trying to go through every possibility here. There's no way this meeting is bullish, right? Probably not. But until he says something, there's a window of opportunity to take advantage of uncertainty, right? And so far, that's a great window for short put sellers to try to pump the fuck out of everything. I hate how stable our upside moves are. Pretty stable. I mean, they almost lost momentum with ISM and Jolts, but they managed to recover pretty well. I do want to close my straddle before the FOMC meeting, though. I can just roll it up and in. Has AMD tried selling chips to CoreWeave? $75 BPS up and an equal and opposite 75 BPS down. Well, we're still at VIX 17, so yeah, 100 basis point moves are not out of the question. Trying to go through every possibility here. There's no way this meeting is bullish, right? Oh, I already answered that. Starting to get a little bit of a foothold here at 25. I think some momentum's picking up. Can move higher to 30. Let's see. Is ES breaking up? A little bit. Testing 42.45 right now. Volume's dropping off, which is a bit problematic. I don't think there's going to be any resistance at 50, but there could be a little. Pretty aggressive buying on futures on the upside moves. Although I do think that most of the short-dated shit's already kind of squeezed out here. What's the white line at 42.35? Well, it's 42.35. Pump this hard before FOMC is telling. Could be. We still haven't seen any signs of de-risking. I'd be more interested to see where they start doing that in significant quantities. Like the opportunity's there, but they haven't really started yet, right? Are Bears gonna defend anything here? Probably not. I don't think they need to. What's ES? S&P 500 futures. Oh, 42.50 is still pretty far away. We need a lot more out of the money call buying probably to get to that level. There's not a lot to squeeze in that range. Like we've already kind of squeezed out the short puts that were at like 42.05, 42.10, or short calls. There's not very many short calls up here at like 250. 225 to 275. There's some short calls above 4,300, but that's a really broad range with no available liquidity. I didn't dress my cat up for Halloween. I don't think cats like having clothes put on them. Does the whole BOJ and spread thing you discussed previously affect yields? Yes. So far, it's had the inverse effect on yields that it should have, which means somebody's trying to fight back against it. That's so tiny, dork. Hold on. Okay. I mean, I think that kind of just means that we're floating along on 0 DTE calls, right? As long as they continue to accumulate. Yeah. Just people straddling. Maybe, yeah, this is a good price point. We haven't seen any like bearish neutral shit come in for FOMC yet. We probably will. That might limit our potential upside range before the meeting. But then like during the meeting, they're probably going to try to grab the rest of the out of the money calls. So if we're still at like 42.25, we could see like $25 up, $25 down. I guess we'll see how that looks later, but why is AMD a rocket ship today? Why not? They sell chips to everyone. Did you see the Japan 10-year yield almost hit 1% overnight? Yep. USD JPY is dropping pretty hard right now. Yeah, it looks like it peaked at 0.975. It's at 0.956 right now. Damn. 10 and 20-year hit 3% down on the day. So more pumps, maybe? What's your longer dated put position? Do you have anything significant beyond November? Just volatility positions. I have some like January shit. But I bought most of that when VIX was still pretty low, like VIX 13. So I'm not particularly worried about most of it right now. AMD had earnings yesterday after hours. Yes, they did. Although their earnings weren't fantastic. And they lowered guidance. What's happening with GME right now? Shouldn't it be moving with the market? Actually, no, not all of the indexes are doing that well today. Like ES and NQ are doing pretty well, and big like mega cap tech is doing well, but um, like breadth isn't too hot. RSP's only up 34 BPS. Dow is up 60, and Russell's only up 30. So it's not the support for the pump here isn't as broad as it was yesterday, which is probably less pressure on mid caps. BOJ intervention could be, yeah. Insiders buying overstock. Hmm. Real question: do I add to Vega positions at 17 before or after FOMC? Probably after. Still no significant de-risking. I'm out of both of my hedges now. Are you more bearish for end of week than you were on the Sunday stream? You predicted pumps into FOMC, so do you see your prediction for downside being realized? I mean, we'll see. Obviously, those predictions are based off of, nothing, right? They're just kind of how we think that the market's going to play out over the course of the week. Uh, but yeah, it's possible. I mean, it really depends on what Powell says today. My hedge is outperforming my underwater puts, which I cut this morning. Account is green. Thank you so much for being here with the education. Nice, man. I'm out of both of my hedges now. Thanks. Are you more bearish for end of week? Okay, answered that. What are your thoughts on Palantir at the current price? I would absolutely not fucking buy it. They have earnings in a couple days. So I'm going to probably pull back my $15 covered calls soon. But yeah, I have no interest in buying Palantir at these prices. If it goes back under 8, I might buy it. If JPA's super hawkish, 17 could be the low, but if he's dovish, I wasted money. Why can't Pi-Fi be Fed chair? I would know exactly what to buy. Would FOMC and JPA make you determined to hold, cut your pickle jar plays for Netflix and Crowd? I don't think I had a pickle jar play for Netflix this week, did I? Netflix is already above risk, by the way. Yeah, there's no pickles pick for Netflix this week. There's Apple and CrowdStrike. Crowd's doing good. It's confirmed the bounce yesterday. It's still moving up, although again slowly. Apple's moved to the upside. I'm not holding the Apple position after tomorrow, and there's a decent chance that I cut it today. Come up like almost 20% on it. We'll see. Netflix from last week is above risk, like way the fuck above risk. The Netflix plays I have in this account, I cannot. I can close them, but I couldn't hedge them. But I couldn't close them yesterday. Never use anything in this shit PDT account as an indication of what positions to enter or buy. Very frequently, I'm unable to close positions that I've entered on it. Did you see that Zillow and those other mortgage bros tanked because of the lawsuit? Yeah. Yeah, don't ghost the PDT account. Most of the PDT account positions right now are propped up on the like bull call spreads I closed yesterday on the move up, which kind of hedged off the risk on the Netflix shit, but um I think I could close them today. I still have 16 days on them though. I don't recommend positions. That's not what I do, TM. Overstock is down to May 2020 levels. Yeah, but it's also worthless. Oh, the bunch of realtors got sued for pumping up home commissions, or well, Realty Board got sued for pumping up commissions for realtors on home sales fraudulently over the last couple years. Netflix above risk just means hold and pray, right? I mean, I'm probably considering averaging down, but again, the positions in this account are already hedged off. The original Netflix play to which you're referring printed and closed. I just picked these up for if it rejected off of 410, which it didn't, and then couldn't close them. I was recommended to position myself tenderly behind myself on Rev Weeklies. Well, I have a cash account too, but the money I put in it hasn't settled yet. Webull now allows you to have both. You can have a cash and a PDT account or margin, which is new. Or well, at least it was added and I had no idea. So I opened a cash account last night immediately as soon as I found out. We dropped back to 4210. We got a little bit of de-risking there. Maybe. If we lose 20, which we haven't really done yet. But if we lose 20, we could slide back a bit. However, the de-risking that occurred is over, so they're not continuing to de-risk. And they didn't de-risk very much. It was like 75,000 delta. One of the things that none of the brokers seem to do except Robinhood is make your deposits instantly available even when you're poor. Like most won't, well, most will make it, like I have, so I deposited this in the middle of the night. And I can buy like stock. I just can't, I can't buy, options. Robinhood should be the same way. You shouldn't be able to buy options with, unless you have a margin account, you shouldn't be able to buy options with unsettled cash. All margin accounts make your deposits instantly available. If I only have a cash account, I don't need to worry about PDT. The problem with PDT is it kind of makes it very difficult to, well, it makes it difficult to play short-term time horizons intentionally, right? And so it tends to benefit from longer dated positions, which are expensive. So PDT is a scam. I'm not a ghost. I just can't figure out how to turn the filter off from yesterday, but I made it not orange. Gherk GM Gherk Nowitzki? What? I'm not Polish. IBK right now has instant deposit via bank payment request. Cash is deposited and usable in about 5 seconds. Works the other way with about half a day delay. In non-margin accounts? I don't have any cash accounts at IBKR, but both margin or cash? Interesting. Really playing to the degenerate gambler, aren't they? I wonder when my last deposit into IBKR was. I don't know. I have to go look at the statement PDFs. Jesus fucking Christ. Why is Houston Wade dressed like a butterfly? You know what? I don't want to fucking know. Hmm. Okay, that was 10 minutes ago, right? Fucking unbelievable. Does IBKR allow those funds to be traded in options specifically? I mean, it should if it's doing instant settle, like if it's making it instantly available, you should be able to buy options with it. Fidelity just has really fast ACH. Like of all my broker, if I pull money, so usually like Fidelity is the account that I pull income out of. Um, and Fidelity will settle into my bank account within like a day. Like if I do it at night, but before like close of business the following day, it'll be settled in my bank account. If I do that with IBKR, it takes usually about 2 days. If I do it with WeBull, it takes like 3 to 5 days. Off topic a bit, my wife works at a computer all day and the cheap chairs are ruining her back. Any recommendations? Yep. Steelcase or Herman Miller. There's no there's no there's no replacement. Those are just simply the best. If you live near a showroom, I suggest trying them out because some of the models can be quite different, but I've tried like 30 chairs since I started doing this, and just because I didn't want to buy a steel case or a Herman Miller, it's worth every penny. Buy a steel case so you can get a bonus this year. Send him a discount code. It was Halloween yesterday, although I still think he's a bit too tinfoily recently. I think he's just pandering to whoever will bring him viewers. And he's found that he's good at pandering to the people that are highly conspiratorial. He's not like a I mean, he's not any kind of like market expert, right? He's a geologist. So he's just doing like entertainment shit anyway, right? It's not like a educational stream, or at least God, I hope it's not. Check my last message. I think I need a new wife. Wait, what happened? Where? It's over. My wife has begun playing Christmas music. She came downstairs while I was making breakfast, turned your stream off the TV, and started blasting Mariah Carey's All I Want for Christmas. She's trying to fuck, Carl. You've really got to learn to pick up these signals. She wants that summer sausage gift basket. She wants you to stop staring at me all day. He's a tool. I was trying to say it a nicer way. I will not, turd. Ascon ES is starting to get reloaded. Can we tap 4250 before JPA's speech if the Fed pauses? I'm trying to get a stop, set a stop on a December put. I don't think so. I mean, mostly because they just risked off at 4230 here. So I think additional tests of 4230 will probably lead to more risk off behavior. Seems positioning's recovered for now. Yeah. Yeah, they're actually kind of still risking off some puts. Yeah, I think they're pretty happy right here. It looks like they're more interested in risking off 4,200. They pulled back about let's see, since 10:45, they've pulled back almost 300K in delta on the put side. They're still buying calls though. See, I feel like once now that they've found their like a point at which they're comfortable risking off, it's unlikely that we see a move significantly higher until later in the day. But I'll let you know if they start selling puts again. That'll be like the indication usually that they're gonna try to move up a level. Right now they're buying back puts and buying calls. I think most of this price action has been in regards to buying out of the money calls for FOMC like fucking idiots. Some of it. I have the guilty pleasure of watching the bag holders on our Bobby. That man is still in there saying Bobby is becoming a company named Butterfly, and they're all getting shares in the new company. Even if they did, it doesn't mean their shares would be worth anything. Maybe he can use these geologist skills to find the locations of the black pools, keeping GME and DRS down. DRS does a perfectly good job of keeping GME down. Costco has a Barca Lounger chairs that look nice. The price of these, you might want to just do steel case. However, whoever asked about the chairs, you just want to do steel case. Steel case or Herman Miller, depending on what you prefer. But I've tried the Burka Lounger chairs. They're not all that great. They're mostly just soft, which isn't something you want in a chair you're sitting in for like 6 or 8 hours a day. So buy her a plane ticket then, except you've spoiled her and now she only flies first class or private jet. Carl, I don't know what you're talking about. Just give your wife some D, man. Is this a sign you're getting old when you absolutely hate early Christmas decorating? Why do people ignore Thanksgiving so much? I don't know. I don't like turkey, so I don't really like Thanksgiving, but I don't decorate for Christmas either. Houston Wade put me on game with Big Gurk, and now it's Gherkinite's Crusade for life. Thanks, Danwich. Thank you. No problem, Lawrence. Head and shoulders on the SPX. Yeah, I don't think SPX is going to do much here. Still the same. Still the same interest. TRS equals black pools, dark pools equals no MOASS. The SSDRS bot has been the final boss this whole time. Does the geologist know the black rock isn't actually a rock? I don't know. We bought a position the other day and I was looking for a good place to set a stop when my wife told me she wanted the D. I was AFK for 45 minutes and I lost $50 on the position. Worth it. Rough. Went to Steelcase to see how much they were, and they asked me to log in? What? They should have their pricing like right up front. I bought mine direct. There wasn't any like login. Unless they're on sale or something. Yeah, you just click buy. The one I have is like 1600, I think. Yeah, it's like about 1600. It's fucking awesome. I like the headrest though. If you get it without the headrest, it's like 1300. But yeah, they have the prices on there. You don't have to fucking log in. Just go to products and then office chairs. And then go to like click on buy online and the price will come up. I got mine on sale, but I don't remember how much I got off of it. But it's like MSRP is 1600. Get a sponsorship so we can get a discount. You guys do that, Thunder? Hook me up with your marketing team. Tailored every office chair at my job is a steel case that retails for 1K. Yeah, their insurance companies encourage them to buy ergonomic chairs because it saves them money on their premiums. Let me be the face of Pickle Financial Marketing. You'd get so many rejections. I don't mind. No, I had an X chair C-mill. It was terrible. Well, that could be like body size though. Microsoft Power Platform. I read the email. I don't know what it does. It's probably AI. Bullish. Everyone's gonna invest in fucking AI to improve their office productivity, and then they're gonna find out that their employees spend all day dicking around with Chat GPT instead of actually getting any work done. If I buy staircase and the pumpers are gonna let everyone in the market sit on their face. True. Does trading in this elevated range increase the chances of a hard de-risk Scarini around 2 p.m.? They're prepared to de-risk. They just de-risk some more at a lower level. Ooh. Also some profit taking on the call side there too. So some stops got hit. This is below 42.20, so this could slide a little more. Probably not much, but a little. JFresh will love this news. Speaking of body size, would you entertain sleeping with a body pillow? No. That sounds uncomfortable. 1.8 billion is about 300 per sale. If only 2022 sales are viable. What are you talking about? Several devs on my team have said ChatGPT fixed their outstanding bugs, but can't explain to me how. Hmm. That's, that seems concerning. What's more better? I, I'm not sure that's the part that really matters. I mean, their velocity is great, but what now? We rely on ChatGPT to maintain our code? Yikes. Well, it'll work until it doesn't. Sounds like you need different devs on the team. Oh, Atomic's gonna get triggered. ChatGPT is extremely useful for someone who isn't really a coder to make some basic stuff on their own. I mean, basic stuff that doesn't work. But yeah. Girk, red candle. Well, I know. You mean another one? Are you expecting another incoming red candle? Hmm. They're still de-risking a bit, actually. Yes, I am indeed expecting another red candle. You might not be wrong. ChatGPT can be super useful if implemented in a compartmentalized fashion. Yeah, I can kind of agree with that. If you know, like, exactly what you need to ask it and how you need to ask it that, then I kind of agree. I would worry about it stifling innovation, though. Thanks, Edwin. I'm worried about disappointment. I'm going to disappoint you. I just bought more 4150 0 DTE and 4050 1 DTE. Should I add 4000 0 DT 2 DTE to hedge? Oh, Jesus Christ. ChatGPT told me this is a terrible strat, but what do you think? That's right. All the realtors I know used to write property descriptions, because they're all so busy. JFresh is learning to be a, what is it, a prompt engineer. So that way when he loses his job to Chat GPT, he'll still have a career to fall back on. My husband said its memory doesn't hold out for long enough to do complete projects. When you need to make modifications, maybe as a starting out point, but not a dev replacement. With using new technologies and frameworks, ChatGPT is helpful for finding a specific part of that doc. As you can pose the question, then ask it where it found it. Boom. Glorified Google search. I mean, don't the environments already have that shit built in? That seems like a slight improvement over what's already there, right? And so asked ChatGPT when you were going to take your shirt off, and it told me it could not answer. Puts on AI. SPX up 53 bips, RSP down 44 bips. That's my market. That's concerning. I don't have a career. If I don't have a career, how do I get a career I can fall back on? Well, start by getting the first career. Is this the new Calvin Klein ad? Would you mind showing us the new briefs? Prompt engineers seem like that fax guy from Office Space that deals with the goddamn customers, so engineers don't have to. Yeah, probably. I might try feeding ChatGPT a third-party control API for some piece of hardware and see if it can generate command strings for me. It probably can. Yeah, but like, yeah, that's kind of also you're just kind of also describing the problem, right? Clever foo, as that like sure AI can be used as like an efficiency tool, right? And it may create a small uptick in like a dev environment, right? In productivity, but it's not replacing you, right? It's not creating a huge like it's just it kind of makes workflow a little it could kind of make workflow a little easier unless you run into an instance where it's wrong, right? And then it makes workflow even harder. And in my fucking around with it, it hasn't taken very long to find things that it's just completely fucking incorrect about. This third-party control APIs that manufacturers were translated from Cantonese by some shitty translate service and not proofread. Ouch. I constantly have to correct Chat GPT and especially Bard. Bard can't even do basic math sometimes. I've found that. I found that in both of them. What would make FOMC bearish? All of it? I'm not really sure there's a bullish outcome for FOMC. It's just higher for longer. Any weakness in JPOW's adherence to their current narrative could be seen as bullish, or at least taken advantage of as bullish in the short term, but there's nothing bullish coming out of the Fed, not for some time. I asked Bing image creator to draw me a centaur the other day, and it made me a giant peener with 5 smaller peeners and 5 legs. Do you have 5 legs? I felt like it will become what calculators are to engineers. People, though, calculators and graphing calculators did all the work for you. But if you know what to put in, it doesn't help. If you don't know what to put in, it doesn't help. Yeah. Still worth waiting until after FOMC for puts, though. Yep. Did someone mention FNGR? No. JFresh is just ensuring that all future uh procedurally generated images are gonna are gonna contain dicks. That's what he's trying to do. He's trying to force Dolly 3 to create so many dicks that it just starts putting random dicks into pictures that have nothing to do with dicks. He's playing the long game. It seems like a worthwhile endeavor. I agree. The most legendary DD to ever be written, and its language, text. One day we'll have a giant statue in his honor for thwarting the AI uprising. Exactly. What was WeWork doing at $600 in November of 2021? The audacity to be at $1 today. Won't they think of the bag holders? It was just overvalued through the pandemic. It had like a $43 billion like private valuation, and then it spacked at like 9 billion, and now it's worth fucking nothing. B2 looks like it's going to break down from this trend and go for 20 or 21. It could, or it could just hold at 2350. The long-term trend, I could see it dropping into like the mid 20s. Maybe this is a little better. Mid 22s. 22, 50, 60. There should be some support. Might end up with an opportunity to sell CSPs on it again. Did you see Airbnb's expected EPS? No. Is it really bad? You could be, Thunder. Oh, they have earnings tonight. $2.11 a share. That's gonna be tough to beat. Especially when they lost two of their biggest markets during the summer. Did you give your thoughts about AMD yesterday? I didn't have any thoughts on AMD yesterday. They had earnings. I don't know if anyone asked me about it other than them having earnings. Good morning, Dr. Drake. In before media blitz of, oh man, nobody could have seen this coming. Wow. Dollars moving back up again. Oh, 1 second. I'm waiting for this to break 4,200 before I add to my 0 DTE position and my non-risky 4,002 DTE position. Extremely risky, McChuggets. Imagine the Bulls losing their pump before FOMC. They're starting to get back. They're going to probably pump back to the upside here. The de-risking's kind of stabilized. It looks like at the peak they shed about about 340,000 delta on the put side. Apparently, Netflix has announced their ad tier has reached 15 million subscribers. I'm not sure what that means. I got my first T dividend. Oh, nice. Do you have it on drip, or you're just keeping the money? When did Dork say 4,200 before FOMC? No, he didn't. I don't believe that. That Netflix's news is being recirculated by traders. It's old news. Okay. I blame him for my red put. Check Discord. I don't see anything. Oh. I see it. Unbelievable. Is this rising consolidation? We're $14 from the top. A new Persian spot opened up in DC. The hours are 2 to 4 a.m. Address 1129 West Street, Northeast. Don't Google Earth it. Meet me there tomorrow. I'm not doing that. Rise. Well, they're bearish and bullish for the same reason. They both show a reduction of interest in the direction that the market's trending, which is why you get consolidation, right? So, like on rising consolidation, there's fewer and fewer buyers to the upside, and that's why volume falls. And on descending consolidation, fewer and fewer sellers to the downside over a period of time. I've been busy the past few weeks, but we successfully rolled out my service for all of North America. Nice. I hope you had a good Halloween. I guess. I mean, I just kind of stayed at home. Although today could be more spooky than yesterday. Cheers, man. Thanks, Nuke. Cheers, dude. So the classification is extremely volume dependent. Yeah. It's a glue factory. Fucking son of a bitch. You've really got to let it go, man. I don't know if you know this, Rims and Tims, but according to the internet, I'm a catch. I'm a 30 something that makes more than 600K a year. And I'm 6'2". I'm also fat as fuck, so it's like I'm like 3 out of 4, but not bad. Centaur -2 points. That depends. I'm sorry if I missed it. Have you talked about how you envision the market reacts to no hike, 2.5 hike, hawkish, dovish language? I think if there's any dovishness alongside no hike, they're going to use that opportunity to risk off the rest of their underwater positioning over the next couple of weeks, week and a half. Your IMBD says 5.6. I don't have an IMBD. Do I? It's just more meat for a crazy to sink her hooks into. Yeah. Plus, you're a mythical creature, a fin tuber who doesn't do the shocked face. Build a strategy from this position, fill it out, and submit. Only to not allow unless level 5. Yeah, that's the best. I said I made more than 600K. Add another 50K to your yearly salary to be with my fiance. She's a 6 foot former volleyball player. So she's crazy, but to add some more spice into that life, she's also a nurse. So uber crazy. You into that? I like crazy. Your LinkedIn says you work in finance. Can you update that to shill? I thought I already had. Is a rare creature referring to be a centaur or not doing the fintuber phase? I think he meant the latter. I am excited to see JPEG. I don't like him as much as I used to, but I'm still happy to see him. Did you make any Frankenstein spreads in honor of Halloween? No. I'm 6'4" and I made 600,000, 60,000. You put the comma in the wrong spot. In my lifetime, does that count? I don't know. Did it? Have you ever been in love? Yeah. Stabby girl? No. Are you gray filtered because the SPX is closing white today? Sure. My cores might be the worst finfluencer to have ever existed. Second place is reserved to the here in my garage guy. What about that guy that used to walk around Central Park and talk about stocks? Maybe at the glue fact, I mean restaurant, we could talk about how I can get my numbers higher. So trying to woo me with your Middle Eastern food and glue factories. Did you meet your true love at an MTG tournament? No. The worst is Meet Kevin. More like Meet Scam. Meet Kevin should really change his name to the Butcher of Wall Street. The homeless guy from Central Park? I don't know if he was homeless. Have you and Crazy Cat Lady had play dates for your kitties yet? No? Meet Kevin is a CFA. Who gives a shit? So is Mr. Poopy Pants. So Gurk, since all of us are so bad at this, but the ones that pay attention can pass a level 7, Series 7. What would be better off working for a broker? I don't know. Does working for a broker pay more than your current job? Thanks, driver. That's rude, Taco Squire. Me, Kevin isn't a CFA, and neither am I. Don't you put that on me, Pickle Man. You mean child wrangler? I feel like that has net negative income. May I interest you in some securities? I love watching IV on FOMC days. Zero DTs are overpriced. Do you think I could run or successfully run a risk desk at a fund? No. So you're saying I could pass a Series 7 if I've been paying attention. It's not that hard of a test. Is the risk test job to take on high risk, no reward positions? No. I would love to think of a pickle jar member explaining to a client why they YOLO'd into a bankrupt company. It's yeah. What's harder, Series 7 or forklift certified? I've never been forklift certified, so I'm not sure. All right, let's see what's going on here. A little more pumping. Yeah, a little more pumping again. I don't know if we're gonna go back up to 30, but we could. Hmm. What kind of goodies does Dork have? Ooh. How do I pass a Series 63 and a 66? Isn't the 66 just the 63 and the 65 combined? Red candle? Uh, I don't think yet. Not yet. No. They're still buying calls here. I read the first half of Intelligent Investor before being bored out of my mind. Could I pass a Series 7? No, not with just bond knowledge. You could come pretty close, though. Should I start a new FinTwit account called Zodiac Trading, where I give a zodiac sign a reading for their trading day? Oh, Jesus. That sounds like way more work than it's worth. Do you need a sponsor to take series exams, or can we just do it for shiggles out of pocket? You need a FINRA sponsor. You could be your own FINRA sponsor, but that would require you starting a fund and becoming a FINRA member. Why anyone would ever want to do that, I don't know, but I guess it's a career. Can you do that and sponsor us all? Fuck no. Do you think Yellen has an only FINRA account? Woo, de-risking lower? I'm surprised. They're not de-risking right now. I think that might just be some call profit taking. Yeah. There's not a lot of de-risking going on here. Maybe like in the money calls? 41.95? 90 and 80 have almost completely collapsed. 65 too. So most of the in the money calls have already taken their, like the deep in the money calls have taken their profits. LPL will hire anyone and pay for your tests. Why would anyone take out a PhD or anything else for that matter? That's a good question. You can take practice exams, Wiggly. I think they have free practice exams available online. Fidelity will pretty much hire anyone too. Being a broker is less about stocks and more about sales. Yeah. Even after they've seen someone's attempts at a port, I mean, they're not looking for that, right? You're not like you're not gonna do that. That's like institutional trading. That's a totally different career path. Is overall IV ticking down? My QQQ straddle just lost 1% IV in 10 minutes or so. Maybe on the down ticks, but no. 1% IV isn't very much. Is one side of your straddle deeply in the money? That's how you get sued? What? It's also rejected at 200. Bearish as fuck. What tips do? Nothing? Yeah, there's not nearly as much like upside pressure on the indexes today. So they're really not burning up any liquidity on GME at all right now. YOLOing 0 DTE client money? Yeah, you're not gonna. You don't even have an opportunity to do that, right? I'm trying to manage people's wealth while watching your stream and JFresh's Bing images during the day. Classy. I don't think you're muted. I want to take profits on my 4200 Cs and reposition higher, but I think that would be dumb. Not if you can get the same amount of exposure for less money, because then you'd just be kind of pulling back profits and repositioning. Although you probably should have done that when we tested 4230 and not now. $14 lower. But I'm sure you'll get another opportunity. It's in our prospectus there. Read the triple asterisks in 2-point font. We reserve the right to lose 100% of your investment capital in minutes using over-leveraged 0DT SPX options. I'm going to write that down. Because I wanted to be. No, I can't figure out how to turn the filter off. So I've got to like reset all my camera settings to get rid of it. And if I do that right now, the camera's going to be off for like half an hour because I'm not good at that. No problem, Hang 10. Tight. Maybe one last pump before FOMC when I can. You should hire a full-time production manager to set up and run your stream. I'll send my resume tomorrow. But then the stream would be a net loss. I guess it kind of is already. Hey, Gork. Red candle. Yeah, I see it. Still no de-risking, though. So JFresh is going to have to be sad a moment longer. Maybe just futures positioning, jockeying around. Not even a lot of call profit taking there. Are we at anything important right now? Oh, okay. Yeah. There's your answer. Don't ever say that to me again. Uh, can you really put a price on all these new friends you've made? Probably. Everything can be valued. CRISPR shows up 12%. FDA granted priority review for sickle cell treatment. The review is usually a final step before FDA decision. I love that your stream is the benchmark with which I measure the world of streaming in its entirety. That's cool. Don't name the price. I'm gonna pretend it's a decent number. I mean, yeah, it's gotta be. It's gotta be enough. What the fuck? Oh, there you go, Dork. There's a little bit of risk off. Another like 60K. Nice, dude. Can we have a JPOW countdown clock on screen, please? I'm just really excited to see JPOW. It's at 2:30. Do you not have your own clock? Time for the question of times. How much to lick the lollipop? My current price is 50K. Yeah, boomy, I'm cheap. But I could roll that straight into a 0 DTE YOLO too. Who the fuck do you think's gonna pay you $50,000 to lick their lollipop? That's like putting in a limit order on your GME shares for $100,000. I mean, we already got one pump today, but I think they could do another one. Ooh, nice. Yeah, it keeps widening. You make it sound like Jimmy won't hit 100K. I know. Win Netflix 0. Not for a long time, man. How many couch cushions do you think Adam Aaron has absolutely destroyed? Like disintegrated? Are you talking about fucking them or farting on them? Not until VR porn with porn star robot. Yeah, that's probably true. Alternatively, the market could be a one pump chump today and go flaccid after the test of the day. I mean, we still need interest to break down a lot more. Or de-risking to pick up. I kind of got what you meant. It kind of means the same thing, whichever word you use there, right? I guess you would have needed the word after. Yeah, but similar point. It's all chop today. A little bit more de-risking going on. Not necessarily. Ooh. They don't like this one, Dork. Apparently, apparently VIX is unsustainably high at 1750. Like 100,000 put delta sold like that. It's not working. I can't wait for them to pump and get insta clapped by a big Clifford Chongus. You mean Clifford like the dog in the children's books? Did you just? Why are you using? No. It has nothing to do. Why are you using TA on VIX? No, the 200 SMA on the measure of volatility is not important. TA breaks down with vol, and you're using the measure. You're doing TA on the measure of vol. It does not fucking work. There, there's plenty of studies. It's just like doing TA on SPX, except with less correlation. You know what it is? You're doing TA on the contract in front on SPX. Sort of. No, there's a bunch of like publicly available academic studies on doing any kind of analysis on VIX. The things you're saying just gross. Elliott Wave is excellent in hindsight. All TA is excellent in hindsight. Because that's what it does. It looks at the past. Hindsight TA is just masturbating. Yeah. Are yields frozen? No, they've been dropping. Well, increasing. Yields have been going up a little bit. Jimmy shot up yesterday in an exciting way. No, it wasn't exciting. James Rowland even made a special stream about it because he's a moron. And yet it crashed back down today. Yeah. Because what happened yesterday wasn't exciting. Which I told you yesterday when you got excited about it. It's not just hindsight, it's foresight. Just because you've confirmed your bias doesn't make it statistically relevant. Am I gonna get a sub VIX 17 entry for some puts today? Not if the market keeps dropping. In fairness to J-Roll, he's a dipshit and a con artist. You don't have to be fair to him. Do US Treasuries usually move 300 bips up and down within 3 days? No. If JPEG grows a peener and hikes, are we going sub 4100 this week? Ooh, that'd be cool. What color tie will JPEG wear? I don't know. Probably purple. That's been his go-to lately. It's more of a violet than a Mace Windu purple, but okay. If JPEG wears a purple tie, how fast should I DRS my bonds? I don't know if you need to. I don't think you need to DRS your bonds. It seems pointless. Much like DRSing shares. Nor can you DRS bonds, I don't think. It's higher for longer purple. What if, hear me out, JPEG wears a bright neon green tie, then hikes at 75 BPS? What is he, a leprechaun? He would never wear that. Is there more risk off going on? There was some. And that is mostly done with now. Kind of just flat. There was the 75K I told Dork about here. But there hasn't really been any more than that. It's kind of flattening out here at 42.10. If JPass speaks like Yoda for the full speech, bullish, that's not gonna happen. When I was a kid, I thought UV was short for ultraviolet. Since those are the wavelengths that were dangerous. Huh. No science classes as a kid. Buying on Treasury Direct, basically DRS. Yeah. But who buys bonds on Treasury Direct? What signals are bears and bulls looking to hear today at the FOMC meeting? Bears are going to want JPow to just iterate what he's already said. Bulls are going to hear softness. They're going to want softness in the narrative. An indication that yields have risen enough that the Fed doesn't need to do more. I don't think they're going to get it, but that's what they need. Because then they can leverage the uncertainty until the next dot plot comes out. Hear me out. What if J-Bow comes out with no tie, shirt down, 2 buttons, looks like he just woke up, YOLO puts? I don't know. That would scare me. That'd be bullish, I think. If J-Pow says the exact same thing as last FOMC, bullish or bearish? Bearish. Hawkish. I mean, right? It really, I mean, like the FOMC decision, especially a pause, really doesn't have any effect on the current positioning in the market, which is bulls attempting to de-risk underwater puts. Don't make the assumption that anything in line with what the Fed says today is going to happen today. The Fed could raise rates and say the most hawkish shit ever, and we could pump all the way into close. Don't conflate that with like an immediate effect on price action. Is buying bonds on Treasury Direct bad or just inefficient? It's just like it's not bad. It's just easier at your broker. Why is Drunken Miller sharding on Yellen? Because she's issuing tons of debt. What if JPal's looking at lagging data and I think yields will govern the market? He's not going to put, the Fed isn't going to put faith in bond volatility to sustain a tight credit environment. That's a stupid pipe dream. Are there any specific academic journals with market research that we would comprehend? Oh, off the top of my head, there's like Journal of Banking and Finance, Journal of Financial Economics, Financial and Quantitative analysis. Journal of Financial and Quantitative Analysis. Sometimes stuff makes it into like science and nature, but it's a little more rare. There's a bunch of other ones. I just can't remember the names of the, well, at least the journals. Usually I just look up papers based on subjects I'm looking at, and I don't really just check like a frequently published journal for anything. People try to day trade macros, a recipe for disaster. Yeah, it can be. Personally, I've been under the pressure for quite a while that Powell should have been raising by 1% every meeting instead of going as slowly as he has been. He should have maintained the 0.75 throughout this year. Scaling back was a big mistake. He allowed credit markets to stabilize too much, following his aggressive hiking cycle in 2022. And when markets stabilize, they're inevitably are going to begin to speculate, right? I've been updating with this report that hasn't been touched since 2012. How has your week been? It's been alright. I had to buy more calls than I wanted to, but other than that, it's okay. He's not a lawyer. I don't think JPOW is. So he's got a law degree. I'm not even sure he's actually barred. But he's never like worked as a lawyer. He did investment banking for like 40 years. And shocker, he's the head of a bank. I don't know why people are so convinced of JPow's like lack of expertise, but he knows more about banking than any of you. But banking and economics are very different. Well, he's still learning about economics. That's why he had such a prolific beginner's economics reading list. Is, one of his staff came up to him and was like, hey, it looks like we're having a bit of a spike in inflation. And he was like, what's that? So, learn, fake it till you make it, right? But we've also seen what economists do when they're in charge of the Fed, and it's no better. Bernanke. Excuse me. Short lend long. What you really want in charge of the Fed is someone who doesn't give a fuck. Right? That was what was great about Volcker. The field where Volker's fucks were sown was barren. When are you running for Fed chair? Never. Shockingly, my sparkling personality doesn't do well in arenas like politics where you have to make everyone like you. Although the new brand of politics where you just try to piss off as many people as possible, that I could be quite good at. Meaning you could, but you can't be bothered. Yeah. You know the president only makes like $400,000 a year? Ew. Earbuds out. But think of all the not insider trading you could do as president. None. That's Congress and the Senate. That's totally different. Bernanke got a Nobel too. Yeah, fucking ridiculous. It's not a real Nobel Prize. It's a bullshit Nobel Prize, but it's. I already get donations from delivering hot speeches, and I don't even have someone writing them for me. Imagine if I had a speech writer. Last time I got angry at someone, I got like $3 on Ko-fi. Surely that's better than getting millions from universities and private banking nonprofit charities. Yet they can do Excel, speeches, and vacuum properly without hitting your office door. My staff? Phobel prize. Yeah, you get an expense account, but only while you're in office, right? They can do Excel speeches. Do we get minutes before we get Pow Pow? We get the decision before Pow Pow. Bernanke was a neolib, and the middle class had savings not being gambled. What was he supposed to do? Keep regulations that prevented multiple economic crises in a few decades? I mean, Clinton started it. You know that we used to have a wealth tax? How many of you know that? Ooh. What's up, Dork? I do. Giving away all the secrets worked pretty well last time. How are you all not shorting AMD right now? Why? Because they lowered quarter four guidance? We used to have purchasing power too. Does anyone remember that? No. The most wealthy used to be taxed like 90%, right? Yeah. It was ridiculous. They tricked us into letting them out of it somehow. Was it when we had things like affordable healthcare, education, updated infrastructure, and a thriving middle class? Yeah. There were other things that weren't so great, like no civil rights, but you know, we did have those things. I made the mistake of doubting Sube one time. Never again. I mean, I'm not shorting AMD because it could run a little bit higher. This isn't good, Dork. I like it. This is pretty much, yeah, this is pretty much called capitulation. How much in the money profit taking are we going to see? They're not going to be able to de-risk anything with this going on. So it looks like they got like 300 and 330,000. It's like another 20, 50. 20, 50, 20. It's like 440,000 delta so far, Dork. But in the last half hour, they've closed 100,000 in call delta. Wait, which do you want me to multiply? Oh, yeah, times spot. Is that what you're talking about? picking up where you're putting down, the country's in shambles because of the rise of civil rights. No, the country's in shambles because we elected people like Reagan and Clinton and allowed Nixon to get away with his absurd economic policies. If rate hike, will you immediately sell your calls? I already got stopped out of my straddle. So I don't really have any calls. um, I should probably buy some before the meeting, but if we're gonna keep dropping, I don't want to. 4,100 end of day is extreme. Trickle down has worked just fine. So 1.89 billion in notional delta fell off, Dork, roughly. Right? Is that what you have? 2.1. I wonder why E-Trade doesn't let us trade 0 DTE puts or calls anymore. Maybe they know something. Maybe. Trickle-down economics has worked exactly as designed in that nothing trickled down ever. Yeah. But like 50 years from now, when all the billionaires die, then it'll trickle down, right? Why de-risk lower? Just can't get it up. I mean, they're not de-risking a lot here. They haven't really de-risked much since like on the put side, they haven't de-risked much since 12-15. But the call side is selling off now, right? Because the in the money calls want to take profits because the price is dropping. I have a buddy who makes 40K a year as a mechanic, and he thinks we shouldn't tax the rich because they create jobs. Propaganda at work at its finest. Yeah, I know. Maybe if they had to pay a lot of taxes, they'd be more incentivized to create more jobs. Why doesn't anybody ever think of it that way? Like if successful people succeed and then that bolsters a class of laborers, right? If those successful people succeed even harder, then laborers will benefit. Entrepreneurs create jobs. Well, some billionaires are entrepreneurs. Most billionaires aren't worth billions. I think that's something a lot of people miss. Most billionaires are worth very little on paper, and have all of their wealth concentrated in equities, which are prone to volatility. You haven't created any jobs. No, no, I haven't. If you had zero taxes on all your trading, you'd hire some staff, right? No. What do I need staff for? Like Elon, yeah. Like all of them, right? Gates, Elon, Buffett. Pickle financial trading floor in the Bahamas. In fact, you've almost destroyed my job. Well, you could occasionally do your job. I know it's hard to pull your eyes away from my face, but surely you've stimulated the Dan job market. That's true. You did create a job when you offered me $5 per ice cream sandwich delivered from the industrial freezer, not dedicated for body parts. That $5 is more of a tip than a salary. You can't have nuanced conversations about it. They just stare off into space and then repeat what they said in the first place. Yeah. Well, that's because he's like 92 fucking years old. I like to think of myself as staff, less of an employee and more of an infection. Silly. You can hire personal virtual assistants relatively cheap to help with some personal administrative type tasks. No. Ew. Did you have an accountant? I mean, but that's a service that you pay for. That's not an employee. That's someone else's employee. I don't employ an accountant full time. We're gonna get really loose with our definition of a job, huh? One, you're just so ruggedly handsome. Two, I mean, because I make more money trading than my day job. Fair. Enterprising young Dan. I can't wait until this Thanksgiving when I get to tell my family I work under Girk's trading desk at Pickle Financial. You mean at his trading desk? And I'll say, yeah, at his desk with a wistful smile. My job keeps asking me I have no aspirations to be a manager, and then I explain that I won't be able to trade and watch the stream if I have actual responsibilities. Managers don't have actual responsibilities. Just delegate all of your work to Chat GPT. Middle management's got to be most at risk for being replaced by AI. You should incorporate it, pay yourself a salary, and then write that off. Hmm. I don't think AI is capable of asking anything. At least not generative AI. We don't have that kind of AI. Self-employed manager. I manage myself. I deserve a raise. I'm not easy to manage. What's up, Spider? Best position to be in the management of a process, not people. Then you can streamline your work with AI, and people just think you're a specialist in your field. All right. Do you think 12 to 13? There's resistance. I mean, I don't know. Bottom's wherever gamma neutral is. I haven't paid attention in a few days. So let me look. Gamma neutral on GME is at like 933 right now, which is probably kind of bullish. Dropping relative to price. Gamma's a bit positive. There's a like the options chain on GME is looking okay. It probably looks shittier after today, but it was starting to look okay. I'll be the last line of defense before financials have to go to the partners. I definitely don't give enough fucks, and they can't bump my salary enough that I can't make it up in trading. Yeah, that's tough. I would find it very hard to be a trader and then also have a job that I didn't just immediately get fired from. We've been over this, but yeah, I mean, if I made like 100K a year and 50K in a month trading, I would just quit in the most epic fashion possible. It's simple. I don't do my job. Well, yeah, but that's kind of just quiet quitting, right? Then come back after you blow all your money with the excuse that you had switched your meds. Exactly. Don't you put that evil on me. Do you think they're setting up for another pump before FOMC? I mean, with the positioning on the chain right now, they're already set up for one. They just need call buyers to stop taking profits on strikes below 4,200. That's currently a big issue for them. 1245 to now. How much delta's falling off the chain here? Jesus Christ. Yeah, almost 500, almost 500,000. So like another 2.1 billion has fallen off in the last 20, 15 minutes. Yeah. I'm the accounting department in a multi-billion-dollar company, and I watch this stream 7 hours a day. I just push work off to managers. So much volume on SPX 4150p. Does that seem a little far-fetched for this meeting? All zero DTEs. No. It could also just be sold. Strange question. Have you been media trained? Why? Specifically, why do you think that? Have you been? My FN manager scheduled a meeting at FOMC release. See, this is why you want to be the manager, so you can schedule the meeting around when JPOW talks. I thought you had leaps, Popcorn. That's not media training. It's learning by osmosis that he did in his time as Larry Fink's neck lotioneer. Do you think Larry Fink has a moist neck? My day was clean until this morning. Now I have an hour plus meeting that starts at 1:30. Awesome. That sucks. Not anymore. We're not being shorted. Let me be very clear. There's no shorting going on. There's there's a lot of in the money call selling, but there's no shorting. Thinkorswim has Minesweeper built into the app. I'm gonna miss so many entries. Why would you play that game? It's the worst. Okay, I'm gonna go make some food because I want to have snacks ready for JPOW. I think I'm positioned fine. Hold on, let me give you guys a quick update. So yeah, after the additional 2.1 billion drop in call delta, um, things have kind of flattened out a bit. Yeah, yeah, things have flattened out about a bit. Still plenty of call interest at 205, 210, 215, and 220. Ooh, some of that may be sold calls as well. It may not just be in the money call selling. It could be some sold calls. 42.30, I'm thinking. 42.25. But significant reduction in the money calls at 65, 80, 95. Yeah, it looks like in the money calls taking profits like all the way down to like 41.50. So there's like in the money call walls from earlier are mostly gone. Okay. Call delta just the delta on the call side just moved up a little bit too. So maybe some stability here. Perfect time for me to fuck off and do something else for a minute. I'll be back. What rad paperwork. These moments of silence remind me of what trading used to be like, and I hate it. I hear you. Is Netflix dead yet? Looks like it's doing fine. Can we get a poll on JPOW? Sure. Um, there you go. If JPOW does 0.25 or 5, can the cat join the stream today? The cat's in trouble. I was making tuna salad, and he grabbed the entire can of tuna and ran under the couch with it. Well, that's just cute as fuck. No, it wasn't. I had to flip my couch over and retrieve a can of tuna from under it. That's what cats do. What do you expect? I've never in my life had a cat pick up a can with its teeth and run off with it. I've had them like eat out of a like food off of a table or something, right? I could see him eating out of the can. but to physically displace it. Welcome back, Don. Glad to see your card fraud is all sorted. What do you mix in with tuna to make tuna salad? Little bit of mustard, Dijon, olive oil, some like finely diced celery and red onion, salt, black pepper, pinch of fresh dill. That's it. Mayo and tuna salad? Like someone from Ohio? I put a little bit of mayo in. Not much though. Like I don't know, like a teaspoon to mix with the mustard. There is no dot plot at this meeting, Dork. Which means JPOW would have to make economic projections, which he hasn't done since Jackson Hole last year. Yeah, this is just standard bankruptcy shit. Did you see something in there of particular interest? A Dijonnaise is a little bit better in a tuna salad. You don't want just straight mustard, or it's a little too harsh. And it just overpowers everything else. I think you want the vinegar. Yeah. I'd be okay with a repeat of J-Pow from Jackson's Hole last year. Just 0.75 when no one expects it. He's got to do something to get Yellen in check. What's up, dork? He's got to do a lot more than save Volker. He needs to talk about a wage price or debt spiral if he's going to pause. What's the opposite of AI? Internal affairs? If he pauses, what's the most bearish thing he can say within reason? That due to the recent increase in inflation measures, the Fed sees a path forward with possibly more than one rate hike. We'll have the decision in 30 minutes. Wow. 23. On my company, I'm having an internal affair. Are you a stay-at-home dad? Because if you're a stay-at-home dad and you made that joke, lame. Oh, Bostic. Bostic's probably like, I'm in the room right now. These guys are getting really hawkish. My speaking fee just went up to 200,000. I'm cheating? Congratulations. I'm not really, though. So you just really want to? Did you predict outcome? Or did you not want to risk your winning streak? Oh, hawkish pause. I think JPA's a bitch. If they say dovish things, are you considering calls? I'm considering calls even if they say hawkish things. Not a lot of talent in the engineering field, if you get my drift anyway. Really? All of my STEM classes were full of talent. Do we get to watch J-Pow walk with the briefcase under his arm and predict what he was going to do, like Greenspan? No. If J-Pow announces 0.25 but releases doves into the room, how do you think the market will react? Absolute fear, because it would mean that the head of our central bank has lost his marbles. You guy's a fool. Lots of talent and guys with no game. I believe that. This is why he's not getting late at work. I don't get late at home and work. I'm sorry to hear that. Or I'm not. I don't know. Is that a decision? Fed reports a pause, but J-Pow only wants to talk about Julia, the new girl he's seeing. Jerome Powell's happily married with children. Forced on me by society. It's definitely their fault. Fucking society. Is any guy happily married? I know a couple. Carl doesn't count. Okay. I know one. J-Pow announces he's dating Taylor Swift. SPX gaps up to 6,000. Yeah. Was it their second marriage? Nope. Nope. I have a buddy whose wife is a plastic surgeon or dermatologist. I'm actually not sure what she does. He's an avid League of Legends player. He was in a band in college, which he dropped out of when they met. As far as I'm aware, yeah. He doesn't do anything else. They have a maid. Dude has a pipe. I've seen it. It's meh. It's pretty average. My dermatologist has such fucking perfect skin. Fuck that guy. He's a pet, not a husband. He's very happy. He's happily married. I'm not married. She can fix him? No, she can't. She did recently try to get him to go back to school. But instead ended up paying for him to go to Vegas with his friends. Oh no, Girk, I have to play video games and be treated like a prize stud. I sense divorce. Nope, she loves him. Believe me, my divorce radar is top notch. She's not smashing other dudes. Comes home right after work every day, excited to see him. Sometimes he's still playing League of Legends, and she waits. She hot? She's pretty good looking, yeah. Pickle jar seething right now. Is he a Twitch streamer? I have no idea. I don't think so. As far as I know, he has no income. No, 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 no. His wife's a neurosurgeon, and he's a trust fund baby. That's a different relationship. Very. She's definitely getting smashed on the side. I too want to play League all day. Well, sounds like you better get on the dating scene. What's her ad? Girk's friend, who's a man child, married to a responsible woman who loves him anyway. Not only responsible, really successful. She has her own practice and everything. They have a lovely, like, 2-level apartment on the Upper East Side. No, I'm not smashing my friend's wife. I, like, before, but they weren't married back then. Do they need a J-Fresh, like, pet human? He's not tall with a lean, fit body. Not for fucking 12 years now. Even then, it wasn't that fit. All the things you'd think about him that would make him possibly desirable, or for some reason their relationship would rationally exist. Nope. Mediocre hog, kind of flabby, like skinny fat, balding. Is she hot? Yeah, yeah. She's pretty hot. She's not like ridiculously hot, but she's good looking. She's an attractive lady. Is he funny? Eh, no. No, she's not Asian. You keep. I've thought about this before too. It's all right. I understand. So you'd play hide the gherkin if it was on the table. Yeah. You know, I might not. I wouldn't want to ruin something so perfect. Why would you rile us up before a J-Pop? Mediocre hog? Yeah, yeah. Pretty, it's not very substantial. He doesn't know the first thing about trading. Why have you seen his hog? You've never seen your friend's dicks? You're friends with a guy for, fuck, going on 15, 16 years? You haven't seen his dick? At some point? Then you guys haven't been drunk enough together. Doesn't sound like a very good friend. I have a hog seeing prerequisite for being friends. Yeah, but yours is more, based on your profession as a manscaper, right? We've known you for almost 3 years. We've never been drunk together. Bro, haven't you all you guys seen all your friends' dicks at the same time? I've never seen them all at the same time. That'd be weird. I pulled a wire out of my friend's gherkin. Ouch. I like how you spelled dicks, J-Dog. Well done. Not even when visiting Carl's wife. What happens at Carl's house is frankly too raunchy for YouTube. Story time. One time at a Halloween party, there was a Polaroid camera in one room for people to take silly pictures with. A couple of my buddies went ahead and took unflattering photo of their peeners and taped it up on the wall of silly pictures. Man, that's like mass texting a dick pic to everyone you know. Nice. Imagine if someone stopped in for the first time about 5 minutes ago. Well, then they'd know that this is a serious stock stream slash investment channel with bar none some of the best research done on the interwebs. I'd stay. It was the funniest shit, especially when one of the buddy's girlfriends went ahead and blabbed that it was them who did it. I was like, why did you tell her? Um, Dork was the one that took the photo. It was Dork's dick. I've seen that documentary, The Wolf of Wall Street, and no one in stocks is a serious person. True. Incoming volatility, Captain. I know, 2 more minutes. I don't even know what it was like back then. It was probably way crazier. They had Quaaludes. Come for the VIX, stay for the dicks. Yeah. Speaking of which, Dixie's almost above 107 again. Oh, now it's above 107. Imagine a world where people have both Quaaludes and TikTok. Those two things can't coexist. The 30-year is at 4.974. Could we? Might we? What? It's been at like above 5 for the last 3 weeks. What if JPOW sets the rate to 0? The market will crash. Not quite yet. Now. All right. PDF. Recent indicators suggest economic activity expanded at a strong pace in the third quarter. Job gains have moderated since earlier this year, but remain strong, and the unemployment rate has remained low. Inflation remains elevated. The U.S. banking system is sound and resilient. Tighter financial and credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. In support of these goals, the committee decided to maintain the target range for the federal funds rate at 5.25% to 5.5%. Pause. The committee will continue to assess additional information and its implications for monetary policy. in determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time. The committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and the economic and financial developments. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, as described in its previously announced plans. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account a wide range of information, including readings on labor market conditions, inflation pressures, and inflation expectations, and financial and international developments. In a related action, the Board of Governors of the Federal Reserve System voted unanimously to approve the establishment of the primary credit rate at the existing level of 5.5%. WAS, told you. I love story time. Just end with "they all lived happily ever after" behind the Wendy's dumpster. Hawkish pause? Well, we'll see. Girk's record remains intact. I know. Let's see how Papa Pow answers the questions. Yep. Every call and put seller right now is cooming. Are we playing Hawkish Pause Talking Point Bingo? No. Mostly just because I don't want to write anything. 51% of you were correct. And me. Who voted for 0.5? I voted for dreams. 473 votes, 168 likes. Wait, really? No, there's like 300 likes. Alright, so we got 25 minutes. I don't think positioning is going to change very much here. Everyone's going to wait and see what Papa Powell has to say. Like the stream, assholes. Thanks, Dork. It's time for people to find out the poll is not anonymous and start naming names. Are we bullish or bearish? Neither. It's a federal rate decision. I mean, it's not immediately impactful to price. Powell can get on stage right now and say the most hawkish shit you've ever heard, and the market can still go up, right? The market moves on positioning, not how people feel. Over time, his words can have an effect, but betting on it immediately having some kind of outcome is not a good idea. And we've seen that, right? We've seen him do a 0.75 rate increase, say all kinds of hawkish shit, and the market's ripped into close, only to come down 300 basis points over the following 2 days, or like the next 2 days, right? But well, especially one like this, right? Where there's really no clear narrative. I mean, they're doing that on purpose because they were trying to create fear. They're trying to create fear without actually doing anything. No, this kind of signals bond buyers that they need to back off. Unless they're stupid, in which case they'll buy more. Why is the Jimmy stock price so bad? Is it getting shorted while illiquid? Yeah. Yeah, it is. Thanks, DRS. Remember back when GME used to have higher lows before DRS started? I do. Why would they stop buying bonds if rates are not expected to go up more? Who the fuck do you think doesn't expect rates to go up more? First of all, the Fed has another rate increase on the table before they hit their terminal rate as currently projected. And everyone expects the dot plot to change at the next meeting, right? Because the last dot plot completely ignored the fact that inflation was rising. And it was already pretty fucking hawkish. That's not getting better. I mean, everyone knows that. Anybody who bought bonds in the last 2 days bought them because they were buying them under the hopes that JPOW said he wasn't going to raise anymore, that they're done with their hiking cycle. But he has not taken that off the table. So thanks, McConnor Berry. Bond buyers will probably wait. Yeah. Burry's probably a zillionaire, like Kenny and Yuta. Tiny Gherk is pretty cool, but I didn't know Gherk could change colors too. Yep, like a chameleon. I'm sick and tired of this sort of Damocles of rate hikes hanging over our head. Do our bidding, JPOW. Let's get Armageddon started. Pull for tie color? Ridiculous. Can we get Stickle on VIX? I don't know where he is. Nope. Oh, there he is. We play the beginning of it. We're gonna rip. Fuck my life. Play the bear song? I will not, Carl. I voted 0.5 because 0.75 wasn't an option. I hope you realize that by playing a snippet of the bear song, if anybody dies before hearing the rest, they will be a ghost and haunt you. Cool. I've always wanted more company. A contrarian indicator from Bank of America Corp that compiles Wall Street strategist recommended allocation to stocks is getting closer to flashing buy. Who cares? Lower the rate for Pontiff? I will not. So Bulls may be in an advantageous position for another week and a half. Unless J-Pow slaps them down. Yeah. Would you have exited a straddle on the volatility on the call side? I just don't have anything right now. I don't think it's going to be all that dramatic. The XPX hasn't priced in anything, including the forward earnings of the SPX. That's correct, Jen Jen. Can I get a U finance mortgage for Pontiff? Do you have collateral? Sorry, guys, I was off I was $4 off my SPX to 4,200 by FOMC prediction. It's pretty shitty. My collateral is I'm good for it. Sheesh. Hmm. No. It's gonna have to be like a home, a wife, partnership in your practice. Has MTG helped you with trading? Maybe on like the strategy side. If someone gave you 100K with the task to double it by the end of the year, what would be your strategy? No repercussions if you lose it. Hmm. This sounds a lot like you're trying to figure out how to double your $100,000, and you're asking me how. Is mana an indicator? No, it's capital. You are very shrewd. I have $10, but we'll do the same strategy. Yeah, I mean, if someone's gonna give me 100 grand to double it, I'm just gonna buy market open zero DTEs, and they better cross their fingers because that's as much as I want to deal with holding their money. And since there's no repercussions and no gain for me doubling it, I have no incentive to make money on it, right? I wouldn't even do any analysis. I would just buy $5 out of the money, zero DTE, market open. If it hits 100%, boom, done, out of the way. If it goes to zero, oh well. What if you could keep everything above the doubling? Oh, totally different approach. Probably target 5% returns month over month. And then at the end of the year, YOLO it all on zero DTEs. Are you streaming JPOW when it starts? Yeah. I am teleporting. How did you know, Squamsk? That's what I do. I phase in and out of our dimension in order to see the future. Now you guys know the secret. Oh well. Light sweet crude Earl. I'm financially ruined. Why would you do this to me? What? I told you not to trade oil futures. You have a horrifically degenerate gambling problem, Ben, that you need to get under wraps. That feels like cheating. You gotta balance the game out somehow. Is this anything, or does nothing matter until J-Pow talks? Nothing matters until J-Pow talks. What's your lower target on SPX if the market reacts negatively to J-Pow's speech? I don't think we go any lower than 4168. And with the time we have left, it depends on at which point in the speech the market reacts negatively, but yeah, it's gonna depend pretty heavily uh on how much time is left. Because realistically, it could be pretty hard for us to fall below like 4190 even today. Maybe 90 to 75. If he's right out of the gate hawkish as fuck, maybe we could test 68, but I definitely think we don't go below it. The move off the pause seemed pretty muted. How do you think the market is pricing Powell right now? Probably the same. I don't think anything had priced to the upside. You're leaning neutral bullish? No, I mean, I'm just gonna see what he says. Stock God test. What the fuck? Gross. Sideways? You trade sideways? Do you think QQQ generally following SPX? Or could that get hit harder with the hawkish POW? It might get hit a little harder. It's leading today, so that'll depend probably on like what effect his speech has on the 10-year tips pricing. Does Jimmy have any hope of hitting 20 by end of year? It's possible. You have passed? I don't know. There might be, Bob. If there is, I don't know what it is. IWM might have any sizable FTDs coming up. I think next week or end of this week? Next week. Beginning of next week. You gonna wait and jump in after he speaks? I already have puts. I don't have any calls right now, but I don't really need any. Solana's up 20% on the day. That's cool. Doesn't Siri have FTDs for November 3rd? 28 million? Siri is not part of the Russell 2K. It's part of the S&P 500. How much money is Ken Griffin about to make? All of it. People still trade crypto? Shockingly, yes. If the market pumps after JPOW talks, is that a good time to buy puts, or better to wait a week? Might be better to wait. What is it, Smooth? Where can I find GME FTDs due? Usually Carl posts them in the GME chat. Was a pause bearish because it tightens the spread on the yen dollar carry trade? Well, only if the Japanese 10-year goes up, but yes. The spread can tighten because the Bank of Japan removed the yield curve control policy. Please put SPX on screen instead of the Netflix price. Oh, did I have the wrong there? Futures is reacting bullishly. Oh, call selling, put selling, both same time. Did you AI generate art that was Persian man petting cat with tuna can? But it gave you a tub of ice cream? Talking heads are selling a 50 BPS cut by September 2024. Yeah, it's time for Powell. Hold on. God damn it. There we go.
To bringing inflation back down to our 2% goal. Price stability
Great
is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are
How do we know
strongly
he's
committed
not
to returning
AI?
inflation
We
to our
don't.
2% objective. As I noted earlier, since early last year, we
They
have
did get him
raised
a
our policy
teleprompter.
rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation.
No, it's not.
The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential,
Why is he
or that
lying?
tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments.
Pepino, my boy, J-Pal looks like he's hiding his real speech in his mud muffler.
And to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
It looks really sad.
To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
No, you don't.
Howard Schneider with Reuters. Thank you, Chair Powell, for doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So,
the fuck was that?
I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So, if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still
inflation
very tight
hasn't
by
come
many
down in
measures.
3 months, man.
GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow. As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident
So we're just
yet
lying
that
about
we'll
inflation
achieve
now?
such a stance.
I mean, I guess so.
That is the broader context.
Every
this
print has been
strong
higher
economy and
for
all
3
the things I said,
consecutive
that's
months.
the context in which we're looking at this question of rates. So, obviously, we're monitoring, we're attentive to.
I mean, we're
increase in
down
longer-term
from
yields,
last
which
year
have
at like
contributed to,
9%.
a tightening of broader financial conditions.
But
since
we're
the
up
summer.
from earlier this
As I
year.
mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices, could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. But that's critical. If things are fluctuating back and forth, that's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. The second thing is that the longer-term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic activity to the extent this tightening persists. And the mind's eye goes to the 8%, near 8% mortgage rate, which could have pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be clear on this, in your opening statement and just now, you seem to imply that you are not yet confident that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right.
Oh yeah, there we go.
To say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and we're not. I will say that we're not confident at this time that we've reached such a stance. We're not confident that we haven't. We're not confident that we have, and that is the way we're going to be going into these future meetings. is to be
There we go.
determining
Uncertainty,
the extent
doubt,
of any
fear.
additional further policy tightening
Cultivate
that
it
may
like
be
a
appropriate
yogurt.
to return inflation to 2% over time.
Gina.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So
What the fuck has he got
let me
going
start by
on
saying
over
we haven't made a
there?
decision about September. You're asking a hypothetical there, but we're going into this December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings.
I wonder
some
to
data
shush me.
on
I can't deal with
economic
that voice.
activity. And so we'll be taking, and also the broader situation, the broader financial conditions situation, and the broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding the broader things.
Nick Timmeros of the Wall Street Journal. Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did
That's as far
publicly
as I
say
can
in the
go.
minutes. You'll know anyway in the minutes. The staff did not put our session back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
If I could follow up, I guess what makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see if you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so
It's resilient
we
because
take it as it is.
you're not tightening on the banks. They're just
Thank you.
going
Colby
elsewhere
Smith
for
with the
their
Financial
money.
Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture. And what's happening with our progress toward the 2% inflation goal? Is the labor market continuing to broadly cool off and achieve a better balance? So we're looking at that. Growth, we look at growth insofar as it has implications for our 2 mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay, and just in terms of the tightening
It's up
of
as
financial
loud as I can
conditions,
get it.
if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is, have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be, for how long will we remain restrictive? Will policy remain restrictive? And what we've said there is that we'll keep policy restrictive until we're confident that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now, we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think it's so important to get that first question, as close to right as you can.
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that, we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? Or for, I'm sorry, 1 additional hike?
I think you're talking about 1 additional.
Yeah,
No, I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time, that's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking is, should we hike more? It's not, and that is the question, and you're right that in September we wrote down 1 additional rate hike, but, we'll write down another forecast, as you know, in December.
Chris.
Thank you. Chris Rugaber at Associated Press. Well, since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certainly elevated, and that goes for the war in Ukraine. It goes for the war between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications. So the UAW strike, as you point out, appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation, and we're very focused on getting confident that we have achieved a stance of monetary policy.
It's pretty hawkish.
Great. And just one quick thing. You last month had gone to York, Pennsylvania, where you talked to a lot of, last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear and is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their incoming.
If we don't go down again, you will
on
laugh.
The essentials of life. So we know that that wasn't new, but that did
Unless you
come
still have
through
your
very
calls.
clearly in the conversations we had in New York. And I walked away from that even, just thinking that we really the best thing we can do for the U.S. is to restore price stability. Fully restore price stability and not fail in that task, and do it as quickly as possible, but also with the least damage we can.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You've spoken before about the pain that would likely be coming for the economy in order to get inflation down. But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome result. And the same is true of growth. We've been saying that we need to see below potential growth, and growth has been strong, but yet we're still seeing this. I still believe, and my colleagues, for the most part, I think still believe, that it is likely to be true. It is still likely to be true, not a certainty, but likely that we will need to see some slower growth and some softening in the labor market conditions to get to fully restore price stability. So, but it's only a good thing that we haven't seen it, and I think we know why. Since we lifted off, we have understood that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic, and the other is restrictive monetary policy, which is moderating demand and giving the supply side time to recover, time and space to recover. So you see those two forces now working together to bring down inflation. But it's that first one can bring down inflation without the need for higher unemployment or slower growth. It's supply side improvements like shortages and bottlenecks and that kind of thing going away. It's getting a significant increase in the size of the labor market now, both from labor force participation and from immigration. That's a big supply side, gain that is really helping the economy, and it's part of why GDP is so high, is because we're getting that supply. So we welcome that, but I think those things will run their course, and we're probably still going to be left, we think, and I think
the tie
still
is
be left
very
with
gray.
some ground to cover to get back to full price stability, and that's where monetary policy and what we do with demand is still going to be important.
I'm curious against that backdrop, if you've gotten any clarity on lags, if you have an economy that's been so resilient to high rate increases.
Oh, he's happy
does
the
that
rate
suggest
hikes
to you
have
that there
done
isn't
nothing?
necessarily this huge
Doubt.
wave of tightening that's still
Yeah.
coming through the pipeline, and that it may have already come into effect?
I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was the fourth of our 75 basis points hikes. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. It's very hard to know exactly what that might be. But you can, for example, an example of where you wouldn't have felt this yet is debt that had been termed out. But it's going to come due and have to get rolled over next year or the year after. So, and there are little things like that where the effects are just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to make get a clear answer and say, I'm just going to assume this is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. And it takes time, we know that, and you can't rush it. So slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here. One quick clarification I want to ask about Rachel's question is, you said you need slower growth. You had always said before a period of lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the dot plot's out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Well, so let's talk about the dot plot first. So the dot plot is a picture in time of what the people in the committee thinks is likely to be appropriate monetary policy in light of their own personal economic forecast. In principle, when things change, that's not like a plan that anybody's agreed to or that we will do. That's a forecast that would change, for example. I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that
Why
data.
release it then?
In terms of,
I mean, like all things in
we're not really
finance,
changing
it's a
the way
snapshot.
in terms of growth.
It can be
what I said was below
100% true at the
potential. So
time,
what you have
and then be completely
recently
incorrect
is
a week later.
growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is, what's potential growth this year? People think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%. But what we've had is with the improvement in the size of the labor force, as I mentioned, through both participation and immigration, and with the better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential. And that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about the meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting, live meeting with a chance of a rate increase that will be decided on subjective criteria rather than objective at each meeting?
I mean, I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think 1 or 2 additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future. And so we're going into these meetings one by one. We're looking at the data. As I mentioned, we're also, we're being careful. We're proceeding carefully because we can proceed carefully at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Neil.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. In light of the run-up in long-term yields we've seen the last several weeks, have you given any consideration to the pace of your asset runoff program? And if there were a judgment that the higher term premium was endangering the dual mandate goals, would that be reason to think about slowing or suspending QT, or should we think of that as more of a technical question around reserves?
So committee is not considering changing the pace of balance sheet runoff. It's not something we're talking about or considering. And I know there are many candidate explanations for why rates have been going up, and QT is certainly on that list. It may be playing a relatively small effect, although I would say at $3.3 trillion in reserves, it's not. I think it's hard to make a case that reserves are even close to scarce at this point. So that's not something that we're looking at right now.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask about the Basel III endgame capital proposal. You've gotten a lot of pushback from people on different aspects of the proposal, and you yourself expressed some reservations. And I'm just curious, could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of, until well into next year. We've extended the deadline. And we'll take them seriously. We'll read them. I'll say what I do expect is that we will come to, we're a consensus-driven organization. Yep. We'll come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
It means broad support.
Janelle Marte with Bloomberg. So, in addition to persistence, when you look at long-term treasury yields, what else are you watching to evaluate how those tighter financial conditions are hitting the economy, and if it will lessen the need for further tightening? Also, do you think that those higher yields could affect banking stress?
So what do we look at? We look at a very wide range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich environment, and we tend to look at a few of them. I'm not going to give you the names, but there are a few of the common ones that people look at, and so they're looking at things like the level of the dollar, the level of equity prices, the level of rates, the credit spreads. Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation, nor will we ignore them. But we would look at them as part of a broader picture, and they do play a role, of course, in many of the major standard financial condition indexes. Your second question was? Banking stress. So it's something we're watching. As you know, we did have, there were issues with interest rate risk and also, funding uninsured deposits in the things we went through in March and thereafter. And so we've been working a lot with financial institutions to make sure that they have good funding plans and that they have a plan for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of bank failures, but so that's what we're out there doing, and we don't have any reason to think that these rate hikes are materially changing that picture, which is one of a strong banking system and one where there's a strong focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Thanks, Mr. Chairman. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap
on my Apple
card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of the use of both debit and credit cards in the payment system?
So you're right. We put a proposal out for comment is what we did. And this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment. And we do hope that stakeholders, and we know that they will use this opportunity to express their views. They haven't been shy about that. So that's critical, and that's what I can say about that now.
Thank you. Thanks, Chair. Edward Lawrence with Fox Business. So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
You know, the progress is probably going to come in lumps and be bumpy, but we're making progress. You know, I think the core PCE came down by almost 60 basis points in the third quarter. So if you, the best thing I could point to you to would be the September SEP, where you know, the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year after that further into the twos. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get as you get further and further from those highs, it may actually take longer time. But the good news is we're making progress. And monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
Well, you've said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that if we fail to restore price stability, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. You know, for the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We've come far enough that the risks have gotten more two-sided. You can't identify that with a lot of precision, but it does feel like the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon Urbinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience of the past year stems from the bank term funding program that you launched in March. Given that bond prices have not recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good question. We haven't really been thinking about that yet. It's November 1, and that's a decision we'll be making in the first quarter of next year.
Okay. Sorry, quick separate question about inflation expectations. The Michigan Sentiment Survey showed a big jump in 1 year ahead inflation expectations last month from 3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the UM thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary in that, but that didn't get picked up. So we look at many things, and so really look across the broad array of surveys and also market-based estimates, and we do that really carefully at every meeting and between meetings. And it's just clear that inflation expectations are in a good place. The public does believe that inflation will get back down to 2% over time, and it will. They're right. So, and there's no real crack in that armor. You can always find one reading that is a little bit out of whack, but honestly, the bulk of them are just very clear that the public believes that inflation will come down, and that's, of course, we believe that's critical in winning the battle.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that evidence is suggesting policy is not too tight right now. So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah. So first thing to say is that it's very important. It's a very important variable in the way we think about monetary policy, but you can't identify it with any precision in real time, and we know that. So you have to just take that. You have to take your estimate of it with a grain of salt. What we know now is, within a range of estimates of the neutral rate, policy is restrictive, and it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether our star has moved or not. Some people think it has. Some people haven't said that don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think years from now, economists will be revising their estimates of R star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, but ultimately we've got to look at the effects that policy's having, accounting for the lags, which makes it difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration.
So if you look at the broad range of wages, wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was. And that's true of the ECI, which is the one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the ECI reading was, if you look back it comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations internally too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although I do think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side issues I talked about and the unwinding of the pandemic effects, it may be that the labor market becomes more important over time too.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
So as I mentioned, I think for much of the last year and a half, the concern was not doing too much, not doing enough. It was not getting rates high enough in time to avoid having inflation expectations, higher inflation expectations, become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although that we're still trying to gain confidence in what the appropriate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'll just say that they're getting more balanced. The risk of doing too much versus the risk of doing too little are getting more closer to balance, because policy is clearly restrictive at 5.25% to 5.5%. That range, if you take off a mainstream estimate of the expected inflation, take 1-year inflation, you're going to see a real policy rate that is well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really, what the proof is really in how the economy reacts. But I would say that we're in a place where those risks are getting closer to being in balance.
And you said the proof is how the economy reacts. What are you looking at to be sure you're not overshooting?
Well, I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now, we've seen periods like that before, and there hasn't been follow through. The data have bounced back. So what are we seeing? Are we seeing, is inflation still coming down? So that's the first thing. Second thing is, in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand still clearly remaining very strong. When you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down, as we discussed, but coming down, in a kind of gradual way. I think that's what we want to see, that whole set of processes continue.
Brian.
Thank you. Brian Mena, CNN. Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, we've been, like everyone else, trying to estimate the amount of savings that households have from the pandemic when they couldn't spend on services really at all, or in-person services. And, there can still be more of that than we think, although at a certain point we're going to be getting back to pre-pandemic levels of savings. We may not be there yet. So clearly people are still spending. The dynamic has been really strong job creation, with now wages that are higher than inflation in the aggregate anyway. And that raises real disposable income, and that raises spending, which continues to drive more hiring. And so you've had that whole dynamic has been, and also at the same time, the pandemic effects are wearing off, so that goods availability, automobile availability is better, or was better. I think it still is. And from a business standpoint, there are more people to hire, and there's more labor supply. So the whole thing has led to more growth, more spending, and that kind of thing. And it's been good. And the thing is, we've been achieving progress on inflation in the middle of this. So it's been a dynamic. The question is, how long can that continue? And I just think the existence of this second set of factors at this time, which is the unwinding of the pandemic effects, that's what makes this cycle unique, I think. And we're still learning. That took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
So to Daniel for the last question.
Thank you, Chair Powell. Daniel Avis from Agence France Presse. Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial stability report said that Israel-Hamas conflict and the conflict in Ukraine pose important risks to global economic activity, including the possibility of sustained disruptions to regional trade in food, energy, and other commodities. You've had organizations like the World Bank warning of a possible surge in oil prices if the war spreads to other countries in the region. I'm just wondering how the Fed is monitoring these developments in the Middle East. You mentioned they are, and just what the potential economic impact could be if the conflict does spread to other countries in the region. Thank you.
I wouldn't want to speculate too much, but I'll just say, so, really the question there is, does the war spread more widely, and does it start to do things like affect oil prices in particular, since this is the Middle East we're talking about? The price of oil has really not reacted very much so far to this. As you know, as the Fed, as the Federal Open Market Committee, our job is really to talk about, to understand the economy and the economic effects, and it isn't clear at this point that the conflict in the Middle East is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people to, to take great, really important notice of. But it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. War in Ukraine, did have immediately very significant macroeconomic implications because of the connection to commodities. So, thank you.
Thank you.
Thanks very much.
Interesting. Yields are getting smoked. Well, for now, but yeah. Through most of the speech. Well, it's odd because we have every single inflation report for the last quarter. Well, not fiscal quarter yet, but soon. Showing increased inflation. CPI, supercore, everything. The only even moderately slight cooling was year-over-year core, and that's just the base effect, right? Like the index itself is up. Unemployment moved up once, a little bit, and it's kind of just stayed there. The rest of the labor market continues to look robust. Productivity is not increased in any substantial way. I mean, his initial response out of the gate was pretty hawkish. They're opening up the possibility of not only higher for longer, which he didn't do a very good job of reiterating, although that was expected of him this meeting. But that future federal funds rate increases could really be anything determined on a meeting by meeting basis and not in line with the projection or the dot plot. But then proceeded to backtrack it with what I can almost call near exuberance about the current economic conditions. So I'm not really sure what to make of it. I mean, most of the expectation was for him to stick to pause, right? And then stick with kind of what he said at the New York City economics luncheon that he attended a few weeks ago, where his confidence in the economic growth was pushing against the Fed's goal. And in today's speech, he almost made it seem like it was in line with the Fed's goal. So kind of, I mean, it wasn't dovish, it wasn't hawkish, it wasn't anything, because I'm not sure that he got one clear point across besides that inflation's kind of just okay for now, but it might be worse. the bears are far from dead. The market's still down like 8.5%. But transitory version 2. Yeah, it seemed like he wanted to hand wave away a lot of things and not discuss anything. It's very out of character. Like, he was just super excited about immigration, which, I mean, even though immigration levels are back up, they weren't that fucking high before the pandemic. And they're definitely not solving the labor shortage anytime soon. He said things like how pay is growing, so it's making jobs which are paying higher than inflation, which is increasing spending, so inflation down? I don't see how. I mean, the market reaction here has very little to do with anything he said. This is, I mean, we just pumped into the top of the calls and now we're sitting here. VIX almost backwardated at one point, and then they shorted the fuck out of, or shorted the fuck out of it again, and it reversed. So I don't know if this really gives us any information on, you know, how the rest of the week is going to play out. But I mean, if anything, it would, the economic data points to the economy significantly overheating in a period of high federal funds rates, which is not good, right? And you know, I talked a little bit about this yesterday and earlier today. There's kind of this period where we're moving from dot plot to dot plot, and since I didn't expect a hike out of today, there's this, you know, potential for the market to continue in a period of kind of uncertainty, right, as we approach OPEX and all of that, into the, you know, final federal fund meeting at the end of this year, where we do get a dot plot, and that will be updated. But you'd think that he'd be, you know, discussing the current data, and it seems like not only in the September meeting, but this meeting as well, he's kind of just covering the data from the summer and ignoring all of the data from August till now, which directly contradicts everything he said. He's instructed to keep his trap shut until they can de-risk. How is that so hard to understand? Because that's not really the way that works, but... No, the call interest was already there. We just kind of pumped to the top of it. From the bottom of it. I didn't think he was so two-faced today. I mean, it's hard to tell if it's just complete uncertainty, or if he really thinks that the labor market conditions easing are going to somehow make their job easier. This is not the data you're looking at. If we assume a sinister scenario, the committee is starting to see instability in global currencies and is worried that any further action to the upside of rates would be too dangerous. Yeah, but the 10-year Japanese bond's already uncapped, right? So if they actually, I would argue that raising rates would have more of a stabilizing effect on currency conditions than a pause. So I don't think so. How's your call hedge? Stopped out. Actually, stopped out like right at the first peak. Unfortunately. That must have been pretty volatile. Yeah, it was like 8 basis point pullback. I'm kind of curious where this ends up here, because I see increased interest in the out of the money, but not at the money. And I don't see a ton of liquidity still. Although the upside does look more fleshed out. The downside doesn't look any weaker. Not a lot has changed on the longer dated positioning today. It's fairly similar to yesterday. But I would say that there's enough uncertainty there that we could see continuation to delta neutral over the next week, provided this doesn't just collapse. Yeah, 42.50 would be the next resistance here. I mean, we're already at 42.41. I mean, from 42.41, there's resistance at 50. It was a little, well, hold on. There's a little resistance at 45. So this could fail here before testing 50. But 50 is still a level with like a significant amount of Vega risk, right? What about Apple earnings tomorrow stuffing this whole thing? Well, Apple earnings could make it significantly harder to push to the upside, right? Just simply because of its massive weight and everything. If Apple were to miss, but if they can pump more broadly and not focus so much on the Mag 7, then it's perfectly possible to keep moving up despite Apple's earnings. At what point do you just cut 1117 bearish bets on SPX instead of just hedging upside? I mean, I've already hedged off the cost of them on the totality of this move up, so I'm not particularly worried about cutting them, but maybe more about repositioning them, depending on where this shakes out. I mean, there's still a decent chance that this only sees, 250 or so, and then fails from there, right? It might be. I'm gonna want to see how positioning shifts. Right, we're still in a negative, like on the monthly contract, we're still in a negative delta, gamma, and charm territory, right? So there's still quite a lot of pushing that needs to be done in order to get us to a position where we'd be stably bullish. Something's already broken and broken bad, and JPOW knows it, and it's only a question of time. Well, if JPOW's gonna stay locked into the current rate, and we continue to see pressure on the carry trade from the Japanese side, with the 10-year yield moving up, possibly. But even that's going to take, a lack of market action above, 1% yield So that's really going to have to push quite a lot more from where it is now to have a more significant effect. Can you take a quick look at Siri? Sure. Looks like it's moving up a little bit today. Not a lot of volume on it, but okay, move up. It's about average. It's been picking up a little bit of volume over the last few days. 17K volume candle on ES. On what? Oh, on the, like, 1 minute? Where? $336. On the test of 4263. 4263 is been a pretty strong resistance slash support in the past, so we'll see. So you think they can reverse the monthly trend on SPX, or still more likely that they won't be able to stop 3 down months? As far as the monthly trend on SPX goes, we've got quite a long way to go before that's reversed, right? Last month's high was 44, 43.93. So yeah, we've got a ways, quite a ways to go before that's reversed. So far this month, we're up 115 basis points, which is basically just today, right? Maybe you're reading the inflation numbers wrong and everything is truly looking good. I wish. I'm back from my meeting. Wow, pumperoonies. Yeah, we shot up there a little bit in the mid-speech. QQQ is up 41% since the start of the year. Yep. QQQ's vastly outperformed SPX. And it's outperformed all historic relation with the 10-year tips as well. Which will be interesting because big tech can't grow with higher rates. And if their growth disappears, so does all their forward pricing. Why do you think he said inflation is coming down? I mean, if you look over the entire period that they've been raising rates, inflation has come down. But it's extremely sticky, right? It's only come down to, you know, the lows that we saw earlier this year, and then it's risen since then. Since March, inflation and like CPI have been trending back up. With a little bit of relief over like the last 2 months in core, right? But headlines moved up where core has moved down. Startups can start up at higher rates. They're also more likely to fail because of it. I think we do one of those 200 BPS down days tomorrow when the market digests this hawkish pause. I'm not really sure how the market's going to digest this pause. Is it possible JPL has to provide cover for Yellen If she continues to sell crap loads of paper, I mean, yeah, raising rates would put more pressure on the Treasury. And it would drain on RRP faster. Inflation's just a rate of change measurement. Nothing has improved. It's just not getting worse as fast. Yeah. Yeah, I think that's something that people don't understand about inflation is that we have never in this cycle experienced deflation. We have only experienced disinflation, which is still a positive rate. It's just a positive rate lower than the prior positive rate. Are you gonna date skew your overnight straddle tonight with closer dated calls again? VIX is at 16 right now. We'll see where VIX is over the next, like, 15 minutes or so. I'm probably not going to enter my straddle till, like, the very last minute. Because I still have some things I need to reposition here. Well, I don't really. I guess I can leave that. But if we pull back overnight, that'd be really bad. Oh shit, did I cut my Apple position? How are my 4002 DTE looking? As bad as they were earlier when you brought them up. Deflation is bad. No, a negative rate of inflation after a period of high inflation is okay. You don't want it to deflate too hard. You don't want an extended period of deflation. But you would want to hit a small period of, I mean, ideally, like skipping a stone, you would want a couple months of deflation, maybe a quarter. Check DM. What do we got? This is the price of the basket as opposed to its rate of change. Oh, for CPI? Yeah, I'll show them. Hold on. So yeah, if you guys have any question about the validity of the data we're looking at, right? This is your rate of change for inflation, right? Like that hasn't cooled off at all. Yeah, it's in fact only gotten worse. And even though oil prices have moderated, they're still additive. And we've yet to see any substantial changes in nat gas, but that could be right around the corner too, right? Maybe JPOW had his monitor upside down. I doubt it. I don't know. It was really weird because he started off very hawkish, right? Like right out of the gate. He was like, we don't know what the fuck's going to happen. We're uncertain. Each meeting's going to be, moment by moment. And then he drifted off into some shit about immigration supporting a stronger labor market. And immigration has never supported higher wages in the history of immigration. So I don't know what the fuck he's talking about. That's not how a more like a higher supplied labor pool works, right? The reason wages are going up is because our labor supply is low. If labor supply were to increase, wages would moderate. Maybe he's just having a blah day and it's just another guy that hates his job and was trying to get through the day. Maybe. I don't think we need a box of tinfoil. I mean, I think it's pretty simple. It's still a hawkish pause, right? The Fed, like, ultimately, out of all the nonsense and double speak, the Fed is going meeting by meeting. They see some effects of, policy decision in, affecting the current economic conditions, but not to a degree at which they're going to stop raising rates or cut rates, right? He said nothing about doing anything, that would actually be bullish. He didn't say anything about, lengthening or shortening the period of time they intend to maintain the federal funds rate. So, I mean, if you look through all the bullshit that he did say, he really didn't say anything that negated what he'd said previously, right? A little contradictory information as far as how much effect they've had on inflation. I would argue that they've raised rates, the federal funds rate, extremely fast in a very short period of time and have had little to no meaningful effect on growth, labor, price stability, or inflation. Yeah, and while he didn't, that's the problem, is he didn't say higher for longer, but he didn't say not higher for longer. Which makes me think that he wants things to cool without changing the narrative. You assume he approaches these speeches prepared, right? They have 2 days of meetings. They're pretty prepared for what they're going to come out and say. It's usually not made up on the spot. They know what questions are going to be asked of them. So the fourth dotted line wins this week. No trophies all around. Yeah, so far. The fourth dotted line is taking the lead. I did draw that line, but is the channel breaking down? We might see this break down a little bit into close if there's some profit taking, just because it's so blown out to the upside. I felt like he just stood up there and lied about the last 3 prints. And it was more that he just didn't discuss them, right? He just took the same kind of stance on inflation that he had at the last meeting, which was kind of looks like there's some pressure, but not enough yet to make a decision. But now we have, 3 consecutive months of upside inflation pressure, and he's acting like we've got one, which should be more than enough to establish a trend. I think he doesn't want to be the cause of something big happening. He seems to be biding his time until something happens that he has to react to. He was very hand-wavy about bank risk. He didn't really want to address bond pressures very much and their effects on, like the terminal yields, but or his terminal rate even. He's scared of Japan? I mean, somebody still has to pressure that position for that to be a significant catalyst, right? And if he was scared of Japan, like truly scared of Japan, he would have raised rates. If that's the fear, the answer would be to raise rates and stabilize the spread. He seemed distracted. Could there be anything other than the carry trade? I mean, there's a lot of things other than the carry trade, but what? I mean, he could be worried about yields pressuring the treasury or rising too fast. I mean, since he last spoke, the bond market's almost collapsed, right? There's been a huge amount of damage done to the bond market. Government shutdown? Yeah. I mean, that's not really a catalyst for anything. But it could make data, difficult to come by for a period of time. But if yields go down again, which they have been for the last 2 days, rapidly, they're just going to force him to tighten more. Yeah. Yeah, there were some questions about the bond market. He mostly brushed them aside. I mean, obviously, he took the stance that, the Fed can't rely on it to be, like, those yield increases to be stable, right? Which is true. Could be worried about banks. Possibly. I mean, they're obviously far more pressured by the carry trade and rising yields, as that directly impacts their losses. He's waiting for Jamie to sell his bags, and then he'll hike. Jamie's already selling his bags, like, next year. Had to pump or banks would die. I don't know about that. Banks were under some pressure from the rising yields, but I don't think they were at the point of dying just yet. I'm not gonna assume any nefarious action because you can't come to any reasonable conclusions that way. Banks will die because a few short puts got squeezed. I mean, one might. But even a pump in equities, right? Like, so say they pump equities here, right? They're just gonna push bonds back up. Like if they pump equities more, and this is not a substantial pump. Regardless of how you feel, we're not up that much from our low. But if like mechanically, if they start pumping equities, they're gonna start to drive the dollar up, which is gonna drive the credit spreads apart, and that's gonna, you know, drive volatility back up. So even if they were to push like a real good pump up to like delta neutral or something, right? Like mid 300s. 3%, 3.1% in 3 days is significant. I mean, it's really not if you consider the VIX, right? I mean, VIX during that period was and is still above 16. So average, just average, like an average move to the upside. I would say most of that pump happened across 3 separate hours too. With a big chunk of it just in the last hour. But I don't think so. I mean, we had a bigger drop than that in roughly the same time period last week, and nobody thought that was significant. I mean, bonds aren't doubling down on their... Well, that's something we're not seeing, is we're not seeing a lot of bond shorting right now. But if equities move back up, we will. Is overtrading a beginner mistake? Yeah. A beginner intermediate mistake. Did today's epi seem built on bull hope, or are we actually getting some support to make a run at 4,300? I think there's some support. I don't think it's off the table. How can you be bearish right now when actual vagrants are starting fast food franchises? I feel like the only people who didn't make money on 4220Cs today are you and Hazy. Was Hazy betting on... I don't know what Hazy's doing with his free time. I got stopped out on my QQQ hedge. Every part of me wants to buy more puts right now, but I'm trying to be patient. Okay. I would be more patient. I already had calls today anyway. What else do you want? I stopped out of them earlier on the first test of like 30. But I wasn't going to carry them past that. There was no support to the upside. I get 200 on the day regularly, but then lose 50 at the end of the day at 150 profits. I've got to cut it out. Hold on one second. Today's an excellent cash gang day, considering a lack conviction for ups or downs. It was an okay day to play the volatility, but probably not a great day for entering longer positions. Yeah, and we'll see how this carries out into tomorrow. Ding ding. So we've got a bit of distribution going on here on the upside test of 4263 on futures. This is a slight breakout from the uptrend. we'll see if it persists into tomorrow morning. There's quite a lot of put interest at 42.50, although most of it is sold. It still acts as a resistance to a continued upside move. So we'll see if that resistance, which is, and this is roughly 42.50 up here, a little higher, but we'll see if that resistance is enough to reject this and drive it back down toward the 4,200 range. It may or may not be. I would say that if we open above 42.25 tomorrow, we're likely to continue to see upside into Apple's earnings tomorrow night. Dixie back down on the day. Actually, most of the day's gains wiped out on that. Yields just rocketing down over the last 2 days. We've seen pretty substantial moves in yields to the downside, especially the 10 and 5 year. But we're also seeing, the 2 now substantially below the projected federal funds rate. We're even seeing the 6-month kind of just come in line with the federal funds rate. So some expectation there in the bond market that, the Fed is done raising rates, which could end up being a surprise next month. Correlation has moved back roughly to the middle range of last week. And we see, obviously volatility dropping significantly, and VIX down, back below the contract in front. And some of that effect is going to be from the VIX expiration today, and that might tighten up a bit. But we on the 1 hour here, we can see that the forward return on VIX yield has moved back negative, roughly negative 2.7%, and the yield curve has moved in the opposite direction. We're probably the most extended we've been since early October. Now we could see this, just snap right back, especially if bond shorts come back in. Some of this may be action on the yen. If we look at the yen carry trade swap, that's moved down in line with the 10-year yield on the US side, and then the Japanese 10-year yield has continued to move up, and I now believe is at so roughly about where it was, 9.5 or 0.956. Not quite above the threshold yet, but getting close. And that reaction may be just the opposite reaction on the US 10-year, in order to moderate that the spread there, right? So we're seeing that the 10-year Japanese bond move up rapidly. We're seeing the US 10-year move down. Bond volatility, on the other hand, is obviously dropping with yields lowering. And generally bond volatility down, correlation down, markets up, right? Because we're going to see a stronger push into that dispersion trade on the equity side. So if this trend persists for however long, we can expect more and more interest to pick up long equity. Now, this could be 2 weeks, it could be a week and a half, it could be up until the next Fed meeting. We'll see how far it carries. We'll see if it even persists. Yields could bounce back really quickly. Especially because we still have just a pause scenario. So, this may already be overextended on the bull side. Am I looking at Tesla? Is this a strong bounce on 200? It's a bounce back to 200. I would say you could maybe confirm the bounce on a break of 207.75, 207.50. probably right in the range it's testing right now. So yeah, I mean, if you wanted to go long Tesla, I would probably wait until you can confirm the bounce, and then, you know, you're looking at your next resistance, the upside at about 216 on the long-term trend. Actually, Fubo over 250 for earnings. Maybe. Their earnings are Friday, right? Morning? We'll see. The Russell, you know, the Russell didn't do so great today. And it's been doing well the last few days. It's probably a little bit overbought. So we may not see the best performance out of the Russell tomorrow, especially if we have kind of a flat day and we get a lot of repositioning. As far as the breadth in this pump, not great. Most of this tech side, right? ES up 103, right? But RSP only up 34 basis points into close, whereas NASDAQ moved up 175 basis points. So I would say almost all of this is like QQQ, or Mag 7. Did you cut your Netflix puts? The ones I could, yeah. On the break of 418. I still have my put spreads open though. But the straight puts got cut earlier. Mag 7 pumps never last, I hope. Well, going into Apple earnings, they might. So be prepared for that tomorrow. And remember, there's still Vega risk at 4250 that hasn't been de-risked at all. Not significantly. So that's still a target for short put sellers on the upside. And we're not there yet. TLT had a special dividend today, which may have helped it pump. Maybe. Might have shaken some shorts off. In that case, they'll be back. All right. Thank you guys so much. I'll write up more tonight once we have a little better look at the options positioning. And I will see you guys bright and early tomorrow morning at 9 a.m. Later, everybody.